January, in the last 6 or 7 odd years, we have actually seen a considerable amount of change in the underlying, and that is the Nifty 50. And a 1.5%, 2% is very regular, a move on the Nifty, but you usually have a good 3.5%, 4% move on the Nifty to the upside or the downside, but at least for the past 4 or 5 years, has been towards the downside. Well, keeping that into consideration, what is your expectation as we move into January? Because it also turns out usually to be a little bit of a pivot point, a fulcrum of sorts for how the year could potentially pan out.
Yeah, but see, I think the market is at an inflection point, and it can go either ways from this side, and that's very difficult to call because we have a very major event in 2025. That's the presidency of Donald Trump. And that's certainly going to shake up all markets, our markets included as well. And then we have a budget as well. And most importantly, we have an earnings season. So if the December quarter earnings season again disappoints big time the way the September did, then I think that the markets can correct further from these levels, maybe even 5-10% lower from these levels. But if the December quarter is generally in line with expectation, and if the investors get the kind of view that the worst as far as earnings slowdown is behind us, then you can see the market make a U-turn from here. So there are many ifs and buts, and we are entering into a very, very heavy news flow season. So I wouldn't want to stick my neck out and say which way the market is going. All I can say is that investors should be in cash, and they should have a shopping list or focus on a few stocks which they want to buy, which they have missed out on, and just try and be light in the market, avoid all kind of leverage positions, and take advantage if there's any major correction which takes place.
You must have already covered this bit, but I do want to, get a better understanding of how things are looking up right now. Now, as far as FII positioning in index futures is concerned, that's standing around 18%, as low as 18%. But I also can, appreciate the fact that it's the, holiday season, which means the turnovers in general are not very high, and hence the positions taken are on a lower basis. But come the first week of January, what are the key factors that you would keep an eye on? And, perhaps in terms of levels too, that you think that could give you a better understanding, a better idea of the direction?
So, Agam, the broad range is set, which is 23,500 and 23,850 as we spoke. A very tight band, not much, 350, 350 points. But a break on either side will actually decide the trend or the trajectory. Just to answer your question as to, what are the key points that I'll watch for, one very interesting point or one very interesting factor to watch for is India VIX. Now, where there is apparent compression or lack of volatility, that we've seen over the last 3 years, interestingly, the VIX has actually spiked 6% yesterday. Now, is that a sign of things to come, or is that more of, a technical adjustment because of the monthly, expiry that transpired yesterday? I think we'll know today. If the VIX sort of cools off today, then perhaps it's more of a technical factor. If we see the index slipping lower, then as I said, that could be sign of things to come. And as you rightly pointed out, January is typically a high volatility month. And in, in the most recent cases, it's been perhaps on the negative side. So we'll have to watch. For me, the key level on the Nifty is the November low, 23,200. If that gets tested, then there's a possibility that it can get breached as well. So I'll be on the watch out, in the month of January for that level. For the very near term, 23,500 and 23,850.
Just looking at this flash on your screen, where Ultratech has approved a 3.7 crore investment in Star Cement at a price of 235 rupees per share. Just let's pull up Star Cement if there's any activity in the pre-open session or not. And this is truly going to continue to be a big theme, about 4.5% up already. A big theme of 2025, I suspect, continuing in from 2024, is going to be consolidation in the entire cement space. And Deepan, I want to come to you on this. What is the strategy? I mean, fewer and fewer regional listed companies perhaps out there which need to be swept up by the two major players. But is this a play that you're looking at? What would be the companies that you would have on your radar?
No, Tamanna, we have zero exposure to cement.
And, why is that? Why is that?
I think that, the kind of capacity build-up taking place over there and the demand is still remains single digit. For example, I think for 2024, it is in the range of 5% or thereabout, and that could move up a little bit in 2025. But there's just far too much competitive intensity. Valuations are rich compared to a typical commodity business, and no matter how much consolidation they take place, there'll at least be 5 or 6 large players, and they are on the way to increase their capacity like there's no tomorrow. And in a way, I think the price discipline which was there prior to the Adanis entering the cement industry, that entire price discipline has kind of got vitiated just now. So I'm not that positive on cement as well. You could have trading rallies, and maybe 2025 maybe may look good optically because the base effect of 2024 is very low. From that point of view, sentiment may slightly increase. But look, we want to focus on businesses which we feel comfortable holding for 3, 5, 10 years or so. I don't think we have that comfort factor with cement.
Dipan, in terms of the banking sector, well, there has been some suggestion that there could be some more opportunity there. Firstly, between private and public sector, what is your preference? And in the private sector banks, would you consider just the large banks, or do you think there is opportunity in lower down the order?
See, first of all, I think banks will do well in 2025 because RBI is more likely to reduce interest rates or at least improve the liquidity in the system, and that will be very positive for banks. But most people are very, I would say, well exposed to the large private sector banks. They're kind of overowned as well at this point of time. I think that tactically, if you want to increase exposure to banks, it should be through the smaller PSU banks where there is still scope for Ps to get re-rated upwards and the business models have improved. The balance sheet quality has improved and the growth rates also have improved. From that point of view, I'd go with the smaller public sector banks. But look, on a 3-5 year basis, I want to gradually be underweight banks because the competitive intensity has increased significantly. It's like a red ocean over there, and gathering deposits is not as easy now that the savers have many options, especially like mutual funds, insurance product. This entire financialization of savings has been detrimental to the banking sector because they are losing access to low-cost deposits, which is their basic raw material to maintain their net interest margins.
Okay, time for our brokerage call of the day. Motilal Oswal has maintained their buy rating on JSW Infrastructure and expects the company to grow at 19%. Rucha brings in more details on why this bullish call on JSW Infra. Yes, Rucha.
Thank you, Tamanna. Good morning. So yes, this is the top pick of Motilal Oswal for 2025. It has maintained buy on JSW Infra, revised its target price to 375 rupees, implying an upside of 21%. Now, why is this? Number one, business is well poised to surpass the FY25 guidance. So not only meet, but actually will surpass the FY25 guidance is what Motilal Oswal believes. It also believes that it has strong market share and therefore healthy market presence will support growth expansion along with its strategic location of ports will help support its long-term growth, and therefore the company's target of achieving 400 MMT by 2030 is highly achievable. It also says that it is well positioned to participate in government's active port privatization efforts, and therefore this will help the company going ahead. Strong balance sheet also would likely help the company to add new ports. Therefore, in terms of numbers, Motilal Oswal expects volume to grow at 14%, revenue to grow at 19%, and EBITDA to grow at 20% compounded annual growth rate over the next 3 years, that is from FY24 to 27. The volume growth drivers, however, could be expanding capacity, better third-party mix, as well as high utilization levels. So adding ports and the margin capabilities will help the company achieve the 21% upside which Motilal Oswal has given. But let's look at the stock price. Over the last 1 year, the company has given around 45% return to its investors, but last 6 months was largely muted for the company, around negative 2% returns. But we'll definitely watch out for JSW Infra over the next year, whether it is able to achieve the 375 target price which Motilal Oswal has given to it.
Okay, so JSW Infra, I mean, I don't know about what you're seeing interesting in the infra play, but I'm going to come to you on the cement question, Kush, and just on charts, if you look at the entire pack, and we'll pull up, of course, Ultratech and Star and see what's happening there as well. So 235 is the price that Ultratech is seeming to pick up, nearly a 9%, 8.69% stake in Star Cement. Any of these on the charts that you have a view on?
So they were starting to look attractive, especially Ramco Cements. We know there was almost a consensus by, on this one on the street somewhere close to the, end of October, starting November timeframe. The stock's actually done rather well. Now what it's seeing is profit booking on the back of very thin volumes. So I'll be a little keen on Ramco Cements, not just yet, but once the fall stems, it's still under that profit booking mode. I think a good entry point for this one will be close to 950, 955 zones where a support zone comes in. So on the dip, Ramco Cements is looking attractive. Ultratech Cement, more of a consolidated move, but if you're looking at a 3 to 6 month kind of a horizon, then Ultratech Cement is starting to pick up steam. So this is the other stock that I'll have on my radar.
Yes.
So Ultratech Cement and Ramco Cements, these are the two that I'll have on my radar.
Okay. Ultratech, Ramco on the radar. Ultratech and Ramco on the radar, says Kush, as per the charts. But of course, this is the big story that we're tracking. What else is working this morning? Let's just take a quick look. Piramal Enterprise is up about 4%. Lemon Tree moving a bit. Jubilant Foodworks is the other one. I mean, Deepan, I don't know if you have a view on this Jubilant story, because when the news broke about the parent company's deal with Coca-Cola, it was seen as a bit of a negative. Now, today, of course, Jubilant Foodworks, the listed component, has outlined the contours of its engagement. And how do you see that?
Well, I think that we are seeing a very strong slowdown in the QSR, the quick service restaurant business, and that's impacting Jubilant Foodworks as well. And the management has gone and done overseas acquisitions, which has kind of driven the profitability on a consolidated basis. But I think a lot of it has got captured in the stock price. And, I think existing investors may remain invested because this QSR slowdown cannot last for long. Eventually, I think the industry dynamics will catch up and you may see improvement in growth rates over there. But from a fresh investment perspective, I'm not sure that within the consumption space, Jubilant Food is the best stock to bet on.
All right. Well, speaking of, Jubilant Foodworks, let's take a look at maybe one or two other stocks which are actually impacting the QSR space in general. And by that, I mean Swiggy and Zomato. Let's take a look at the charts, specifically in terms of Zomato, because what's really happened is a little bit of a temperance, a moderation in its price movement ever since we've had the listing of Swiggy. Kush, what can you tell us about Zomato? Also, if you could also give us your view on Swiggy too.
Well, Swiggy is a fairly recent listing, so very limited data, so I'll have to skip that one. But as far as Zomato goes, well, while the medium-term structure of Zomato is looking very interesting, I think in the near term, some pressure cannot be ruled out. Now, it's taking the support at the 50-day moving average close to the 270 mark. What is actually a little concerning is the fact that now, since it's entered derivatives, right, the 300 level, which was technically anyway a strong resistance zone, is starting to act as a resistance from a derivative side as well, where you're seeing a lot of call congestion happening at those levels. So while you could look at it from a medium term perspective, near term, I think let the stock settle. I don't think the fall that's begun is just complete. Wait for levels of 255, 260. That's where a good accumulation zone will come in, and that's when you can start accumulating Zomato. Overall bullish, but near term, some profit booking, some pressure could persist, and 255, 260 zones look like a good level to start accumulating this one.
All right, so that's as far as a handful of names from the quick service, quick commerce space is concerned. But let's also take a look at some of these auto names right now. What we're seeing, at least in terms of gains yesterday, two names stood out. In fact, two names on the Nifty's top 5 gainers was, one of them was M&M. The other one was Maruti, but I'm going to talk about M&M because this is the one which has, it's not been without volatility, but it's been one of the relatively stronger ones in general from a longer term basis. Kush, your view on Mahindra and Mahindra?
Fairly bullish, but from a medium-term perspective, the momentum is missing. So there could be a possibility that you might have to be patient with this one. But a 6-month time horizon, M&M is the only stock that actually stands out in this space, in the passenger vehicle space. So from a medium-term perspective, keep it on your radar. Can be accumulated at current levels.
Okay. Just about 30 odd seconds to go for markets to open. Very quickly, Kush, is there a Star Cement trade this morning? First few minutes.
No, I'd skip Star Cement.
Okay, he'd skip Star Cement. Why am I talking about Star Cement? Ultratech is moving to acquire Star Cement. The cement wars continue. And with the next leg coming in, that's the big story this morning. But just about, markets opening right now, what is it looking like? Remember, we're in for a quiet start as far as the implied open is concerned. And it's not half bad, actually, about 90 points up. The Nifty comfortably above the 23,800 level. So those levels holding up after what has been a bit of a bearish trend in the markets. The Bank Nifty also not doing too badly this morning. Let me just pull up the heat map very quickly and give you a sense of what the mood and flavor is. On the losing side, Apollo Hospital, Britannia, just notice the winning and the losing range throughout is fairly narrow. Tata Motors on top, about 1% up. You're seeing some move in auto, and there's a DAM Capital note on autos today. We'll get that up shortly. Which is fairly positive on a sector which has, not seen too much positive commentary recently. But Bajaj Auto now on top of that heap, about 1% up in a quiet market. That's not half bad. Some of the private banks also perking up in trade early morning. ICICI Bank, Indus in, Bajaj Finance as well. So it's autos, it's banks this morning. On the losing side, maybe some consumer names, a Titan, a Britannia, all of them moving out there. Otherwise, fairly quiet, I would say. Even breadth, not that great. Agam, not too many bad stories, a little more action on the broader markets, perhaps.
Yes, absolutely. But actually, it's curious as to how the broader markets could potentially pan out. So let's take a look at the indices right at the start and see where the mid-cap and the small-cap indices are, in fact, currently. So the mid-cap index is up around 0.4%. Do remember that over the course of the year, there's been a significant outperformance for both the mid-cap and the small-cap indices. And today, it does seem like the picture isn't very different, though the outperformance is not considerable. Now, at least as far as your sectors are concerned, we're looking at the auto sector leading the gains along with something like the private banking index. And consumer durables along with PSU banking index is also doing reasonably well. The only one in the red, in this marginally so, is the healthcare space. And even in terms of some of your relatively smaller indices, you have something like the Nifty PSU index, which is also up and about, as is the case for the Nifty Metal Index, which is also up by 0.3%. Let's bring the stocks then in and talk about which ones are in focus on the back of news, as well as a handful of business deals wins. So firstly, in terms of news, we have Jubilant FoodWorks, but do remember that Jubilant FoodWorks to a certain extent has already reacted based on the promoters buying stake into Coca-Cola India, and this is a related update coming through, which is why we have a 0.6% up move there. Purvankara, of course, on the losing end, but only marginally so. And SKF India on the back of the demerger, now up around 2%. But what about the handful of other players which are actually moving on the back of some deal wins? So Gensol Engineering up around 7%. Dixon Technologies signs yet another MOU, once again looking to move towards the mark of 19,000, and PowerMech as well on the back of an order win, up around 2.4%. Besides that, of course, we also have a handful of brokerage notes which will also be in focus, and among that we have TVS Motor Company and Escorts, and we in fact have brokerage notes from DAM Capital as well as MK this morning. And then we've seen a mention of these companies in GSW Energy as well, where Motilal Oswal continues to remain positive. But we're not seeing too much traction there except for something like Escorts, which DAM Capital sees some amount of value at this point in time. But that's what we have in terms of the broader markets, largely positive, and a tad bit of an outperformance too with respect to benchmarks, Tamanna.
Yeah. Okay. I think a lot of focus right now on, I would say, the cement space this morning. A lot of focus, in fact, on the primary market. But, markets aren't bad. You were talking about possibility of shorting the Nifties, 0.5% up, Kush. Just in the first few minutes. What is the strategy? What's the call on the Nifty this morning? Oh, sorry, the Bank Nifty. You were talking about shorting the Bank Nifty, which was about 0.5% up. The Nifty also not too shabby this morning. You said stay away from Nifty, possibly short the Bank Nifty. I think that's a bad idea right now. What would be the play on the Bank Nifty? Let me start with that.
So the bank Nifty short idea was contingent on it breaking the previous day low because of the negative RSI divergence that we're seeing. So we'll wait and watch, and hence, it wasn't an opening trade. You need to see how the trade sets up, right? So we're waiting it out. 51, 500, 51, 700. That's the range on bank Nifty. So we'll wait it out, see if that is indeed taken out. Nifty actually isn't, while it does appear it is in the green, about 1/3%. But from a technical standpoint, if you see, it's still at that, the 23,850 mark where it's opening up. The saving grace, even if it's been just 5 minutes, at open, the put base, right, at the 23,800 mark is starting to gather steam. So if that sort of adds up and we are able to breach this 23,850 resistance zone, then you could see some moves towards 23,950, 24,000 levels. Maybe not today, maybe in the coming days. But I think from a near-term perspective, that's the range that the Nifty is going to see. And that said, the Nifty is yet to break that 23,850 mark. So let's just wait and watch.
Okay, let's just wait and watch. Anything you've picked up very quickly in the first few minutes of trade?
So, Taman, it's more of an update actually. Yesterday we spoke of 5-star business as the BTST trade with the first target of 807. Now the stocks opened, with good gains added on, some more after an opening of about 0.5% or 1% higher. The stock is now 2.5% up. The first target's been hit. Second target 831. So then the suggestion would be that, since the stock is moving, it's not a bad idea to hold it with a trailing stop loss rather than booking out. So hold 5-star business. Yesterday we had initiated it with the first target of 807 and 831. Now you could place your stop loss near that, or rather the trailing stop loss near that 800 mark.
Dipan, what would be, you started by saying that you don't have any cement stocks. You're not looking at that space at all. What are you feeling about, so let's leave cement to one side, though the acquisition is going to be one big story this morning. How are you feeling about banks this morning? The Nifty bank roaring up, and I think private banks among those doing even better.
Yeah, as a medium to long-term strategy, I want to get underweight banks, but I think that there's a very strong trading play within the banking sector because in this maybe first half of 2025 itself, we may see interest rate cut. We may see the government taking action in terms of liquidity and additional steps to boost the economy, and that'll be very positive for the banks. But on a medium to long-term basis, we want to get underweight banks because of the highly competitive nature of the industry, which is taking place just now. And also the fact that this entire financialization of savings and the recapitalization of the PSU banks means that there's going to be a lot of pressure on the banks to maintain their net interest margins and to maintain their growth rates. So it's an industry which is, getting very much, I would say, commoditized. It's an industry which is getting into like a red ocean. So from that point of view, I don't think that we want to get overweight banks, but it's a cyclical industry as well. And I think that we are about to see an upcycle.
All right. Well, in the latest, what we understand from the cement sector is more consolidation. And for now, Ultratech Cement, it seems, has picked up more stake in Star Cement. And we have Mihika who's joining us to give us an update on this one. Mihika, over to you.
Thank you for that. So you've seen Star Cement, it's up 6% on back of the news. So Ultratech Cement is going to buy 8.5% equity of Star Cement, which is a total acquisition cost of 851 crores. Now they're going to acquire 3.7 crore shares of Star Cement at a price of 235 rupees per share. And this entire acquisition is expected to be completed in 1 month. But it's a non-controlling minority stake that they are acquiring in Star Cement. When you talk about the calculations, the deal is done roughly at a valuation of $103 to $104 per ton. Now Star Cement has a total combined clinker and cement capacity of 10.47 MTPA as of FY24. When you see the breakup, the clinker capacity of as of FY24 is at 2.8 million tons per annum, while the cement capacity is at 7.67, and they've targeted a clinker capacity of over 6 million tons per annum for FY25 and a cement capacity to remain stagnant. Lastly, Star Cement has more of a presence in the east, which is somewhat of a little bit of a turn in terms of what we've been seeing in terms of the geographical trends of the consolidation theme in the Indian cement industry. The last few deals have been focused on the south region of India, but this one takes place in the east of India.
Thank you so much for joining us and taking us through the latest in the cement space. Dipan, I want you to come in on the electronic manufacturing services area. We've seen some staggering price action there, and of course, potentially for good reason because of the kind of growth that all these companies are showing on a quarter-to-quarter basis. And firstly, well, I'd reckon, and I imagine that you would say that these companies are, well, extremely, well, richly priced. But at what point in time would you like to perhaps start nibbling into them at a 15% correction, 20% correction? Is that even possible with the kind of growth rates that we are seeing when it comes to the earnings?
No, Agam, you just have to keep that sector aside. It's just too expensive at this point of time. For a physical business with such a low operating profit margins, I would just avoid. I think it's just that there's scarcity of stock over there, and a lot of investors have kind of crowded that counter. But I would say that it's just best to leave it on the side. It's gone for the next 2, 3 years, if you ask me. It's time to focus on the next EMS, whatever that could be. And I know you'll ask me the question, which is the next EMS, but I don't have an answer for that. All I can say is that in the last 1 year, 2 years or so, a lot of interesting companies have got listed. Platform companies, companies with very, I would say, unique business models, operating in areas which are very niche industries as well. I think investors are best to focus on such new generation, new listings. I think the winners for the next 2, 3 years will come from there.
Okay, I'm just wondering, Deepan, if you're getting excited by the whole quick commerce play, Zomato, Swiggy, I mean, quiet right now in the last week or so, but otherwise this has been all the rage. You might have a third player who could go in for a listing next year as well. Do you think that this is a theme that continues into 2025?
Yeah, I think so. And investors will track how these businesses are growing and at what point they will turn profitable and at what point in which year they will be solid into the black and contribute in a very, very meaningful fashion to those companies. So I think it's a kind of a story which is going to be actively monitored. And from that point of view, it makes sense to have some exposure to either Zomato or Swiggy, but I would wait for a 10-15% type of a correction. As I said, I think that we are entering into a very heavy, news flow season. And if you do have a correction, then these are the kind of stocks that you want to focus on, the Zomatos, the Swiggies, and some of the new platform companies, the new listings, companies like Zaggle Prepaid, RateGain Technologies, and, Car Trade. These are the companies which I feel have got a very differentiated business model, which can scale up really well as well. And that's why I think we are focusing on a disclosure. We and our clients may have invested in these companies or they're on our radar and we're looking at investing in the near future.
All right. And well, let's take a look at perhaps, okay, so a handful of counters which are on my radar. And well, first one is Hardcore. Now, what's really happened at Hardcore is that in terms of price, well, we in the last couple of weeks, we saw it hit a low and then eventually recover. And it does seem like it's, well, throwing a lot of, traders, investors, again, out of their long trades. What's the sense that you're getting here, Kush, when it comes to Hardcore?
Well, not too great. The stock had actually seen, as you said, quite a bit of a run, but it seems to be fizzling out. All the key averages, now are starting to act as a resistance. So I think this 245, or rather, this zone, perhaps, around that level, will act as a near-term resistance. So if anyone's got a long position, it's not a bad idea to perhaps, look at lightning, going light on Hardcore at the moment. If you're in this for a positional trade, then 220, that support zone will start acting as your stop loss. I wouldn't suggest initiating a long trade on Hardcore at current levels.
All right. Along with that, let's also take a look at what's happening in the defense space. And perhaps I can take a fundamental, slightly longer term point of view from Deepan as well. Deepan, a lot of correction of late in, the defense names, and to a certain extent, we understand that earnings from quarter to quarter have also been very, very lumpy, but that's also because of the execution on the various projects that they have. Do you find value in these stocks? And how would you compare a relatively larger name like Bharat Electronics as compared to some of your relatively smaller, more niche names, which are either in the Navy or, for that matter, something like a Hindustan Aeronautics?
First of all, I'd remain invested in all the defense companies, be it public sector or private sector. And from in terms of increasing exposure, usual disclosure, we and our clients are invested very positive on Bharat Electronics and Hindustan Aeronautics and Bharat Dynamics. I think these businesses, in a way, are superior and perhaps a better traction as well. But I think they're not at that pure play, cheap valuation for you to take a very large bet on them. Sure, a correction has taken place, but still they're expensive from a point of view that what growth rates they can generate, and they're largely discovered as well. So from that angle also, I would just remain kind of neutral. If there's a further correction, then we may look at it again.
Let's take a look at 5-star because that's where, well, it was one of Kush's calls, and of course it's moved up significantly at the moment, up 3%. Kush, what do you do from here on?
Well, this is where you move that trailing stop loss higher. Earlier we recommended, but an 800 trailing stop loss, the stock's up about another 0.5% to 1% from the last discussion we had about 10 minutes ago. Not a bad idea to bump that trailing stop loss up to about 807, which was the first target, and continue riding this wave. The markets are doing their own thing, but the stocks actually gained from strength to strength, even if it's been just 15 minutes. So continue. 831 was the second target. Closer to that level, it's not a bad idea to book out, but for now, trail your stop loss to 807.
All right. And Dipan, how are you playing the healthcare space? Is it through diagnostics, hospitals, or, well, plain old pharma?
No, I think hospitals also have done well. And as a measure of disclosure, we have an investment in Apollo Hospital, and it's performed really well, and numbers also have followed through pretty nicely. So we remain invested over there. But broadly, I think they are pretty much expensive. Some new listings are interesting, like this Yatharth Hospital is there, Rainbow. Interesting companies, reasonable valuation, very focused type of businesses in terms of the kind of treatment they offer or the area they operate in. So there could be a few outperformers over there by and large. So I would remain overweight healthcare, because if the economy suddenly starts to slow down even further, then these are the segments, these are the sectors where you may still find a place to hide, and they may still be able to sustain their growth rates.
All right. Thank you so much, Deepan. Thank you so much, Kush. We'll take a very short break, but we're coming right back, not just with all the market action, but also the big story of the day. We've lost former Prime Minister Dr. Manmohan Singh. We talk about his legacy after this break.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So
Welcome back. You're watching India Markets Open, and I would say Bank Nifty is the hero of the day. Among the Bank Nifty as well, it's the private banks that are doing fairly well. It's been a strong day for the finance space. I would say financials, autos are the ones that are moving. IndusInd Bank showing an interesting breakout, just about 2% up. I want to see what the entire cement pack is doing as well. I mean, we talked about how Ultratech and Star Cement is the big story. Ultratech moving clearly to acquire Star Cement. As our analyst Mihika explained, it is a tad expensive, but at a lower rate than what they've paid per tonnage for India Cements at least. So Star Cement at least 6.5% up right now on that acquisition spree. But meanwhile, let's look at the rest of the cement pack and what's happening there as well. And Ambuja and ACC and all of the other players today as we focus on the infra play. Those also up in the green. All right, let's just take a look at what's happening with auto stocks as well. Auto is the other big factor that we are seeing in the markets today. Auto stocks also roaring. There's a DAM Capital report which talks about how Tata Motors is one of its big bets. I'm also seeing a Bajaj Auto doing fairly well. And, you know, what I found interesting, Agam, is that so far everyone's been talking about weak Vahan data for auto sector in the month of December, which is generally what you expect. No one really buys those cars right before the year of date is going to change.
Absolutely, spot on, yes.
But going forward, I think that realization is coming in that Jan and Feb might actually be a pretty interesting take.
Yeah, it certainly will be, and it's going to be an interesting one to keep an eye on as well, because well, let's not forget that there are plenty of more electric vehicles, new launches on display, and which is potentially planned for 2025, and a lot of that will come through in the first quarter. and much more on that towards the second half of the calendar year. So we're going to have plenty of other...
I'm just going to stop you there, Agam. I have with me former Finance Minister P. Chidambaram. Mr. Chidambaram, good morning. I'm actually taking you straight on air. So, we're talking this morning about the passing away of Dr. Manmohan Singh, and you are someone who has known him very, very closely in the capacity of your Prime Minister. You were in his cabinet, a political colleague, and his working style as well. Of course, deepest condolences to you today. And what are your thoughts on what legacy Dr. Manmohan Singh leaves behind?
He was ailing for a long time, and I was mentally prepared for the inevitable. But his passing away comes as a great shock and filled me with immense sadness.
I just want to understand, Mr. Chidambaram, when we talk about the legacy of Dr. Manmohan Singh, a lot of it is centered around 1991. That moment which changed, the destiny of India's economy. Today, we have a lot of people for whom 1991 means nothing. A lot of our countrymen and women are, have no idea of what the world was before 1991. Explain to us why this was such a pivotal moment.
1991 was a clean, decisive break from the past 40 years or so. Therefore, those who were born after 1991 have no idea of what kind of India we had before 1991. And there was one airline, one telephone service, and there was no choice of goods or services. And the state was all pervasive. And the state brought in the state's notorious inefficiencies and scarcities and shortfalls. So when I tried to explain to my granddaughter, who was born after 1991, she cannot imagine the India we lived in before 1991. That is natural. For example, many of my age and younger don't know what pre-independence was. So that's perfectly understandable. We have to include what changed in 1991 in our history, social studies, economics textbooks. Therefore, the unprecedented historic change that Dr. Manmohan Singh as Finance Minister brought about in 1991 is more widely known to the young generation and to the future generations.
In all your time working with him, and he was your boss in that sense, in the Council of Ministers. What was his nature in terms of dealing with the politics and the job of governance? Give us any insight and anecdote, Mr. Chidambaram, into the man who was Dr. Manmohan Singh beyond what we all saw from the outside.
See, he was clear in his thinking. Apparently, he must have formulated a set of economic policies much before he got a chance to be finance minister and then later prime minister. But he didn't challenge the then government. He was economic advisor, chief economic advisor, RBI governor, UGC chairman during previous governments. But he didn't challenge them. When he got an opportunity, he did not hesitate to break from the past. And that he did with determination and careful planning. I remember in 1991, the opening in import-export control, in foreign exchange regulations, and industrial policy, when tentative openings. We opened the door a little and a little more and a little more. But when he became Prime Minister in 2004, there was no hesitant opening. Once we decided that we will liberalize the sector, he encouraged us to go whole hog, which is why the 1991 to 96 period actually was more significant in terms of the decisive break, but the kind of reforms that were accomplished in the first 5 years when Dr. Manmohan Singh was finance minister pales into insignificance with the dramatic reforms done after 2004.
What would you say was, your biggest memory and lesson, Mr. Chidambaram, from working with Dr. Manmohan Singh, just observing how he has dealt with, I'm sure, the great pressure of being in governance, being Prime Minister, the politics of it and the challenges of it?
I was with him throughout the 10-year period when he was Prime Minister. First as Finance Minister and then in between two spells as Home Minister. I don't know if any other cabinet minister for the whole 10 years survives today. I don't know. I can't immediately recall. One or two of them have left the party. But every time he had an idea, he would call the minister, listen to the minister carefully, and then formulate the policy in precise terms and encourage the minister not to hold back. Every time I went to him with a proposal, he would listen carefully and then he will give his views. And once we agreed on the contours, he would encourage us to go full hog, not to hold back or to add ifs and buts. That's how we opened up the right to information, right to education, right to food, the Aadhaar, the rollout of the direct benefit transfer. And there was no hesitation and there was no half measures. Once we decided something, we will go whole hog. For example, when we abolished the treasury bills, there was a clean break when we decided to allow foreign investors to invest in Indian bonds and government bonds. It was we went the whole walk, went the whole distance. That I think was a special quality, namely never to do or implement a half-hearted measure, a half measure. If you have decided something, do the measure in full. That is something which I appreciated and I try to follow.
Thank you so much for your time, Mr. Chidambaram.
Thank you. Thank you.
All right, that was former Finance Minister and former Home Minister P. Chidambaram talking about his experience working with Dr. Manmohan Singh, former Prime Minister from 2004 to 2014. In fact, Hemendra Kothari, Chairman of DSP Asset Managers, also joining us today for his thoughts on this somber day. Mr. Kothari, thank you so much for your time on NDTV Profit. I think what would be important today is to give a sense of a lot of people who were either not in the markets. We're a young population. A lot of our millennials, Gen Z, today have no idea of Dr. Manmohan Singh's contributions or his legacy. They know him as the Prime Minister from 2004 to 2014, not much else. What would you say to someone who's trying to understand who Dr. Manmohan Singh is?
Well, to my memory, first of all, Dr. Manmohan Singh came as a liberalizer. Apart from that, he was a very humble person. I had a chance to meet him when he was a even Reserve Bank governor. And we had a function for a German bank which was starting and we were representing. He came with his wife in the dinner, simply sit down quietly and no any kind of fuss around there. That was the first impression which I had. Of course, I met him before. Then when he became the finance minister, I was the president of the stock exchange. And 1991, along with people like, of course, Chidambaram and Rakesh Mohan, who was an industrial advisor to industry ministry, they formed this liberalization of the budget. Now, that budget changed the whole picture, and today we are having the fruits of that benefit, what he did in past. And whenever a person used to, I approached him a couple of times, and he was so humble. Even he used to come down when there is a small thing at his Prime Minister's office, where I had gone to that small function. He comes down and says, "How are you, Kothari Saab?" So this kind of humbleness and being a Prime Minister was, I always will cherish and remember. He was there in our stock exchange when there was a lot of crisis and problems were there, like pushing up through Harshad Mehta time. And he listened to me quietly and he put inquiry into the whole thing as such. So I think Dr. Manmohan Singh liberalization that time, we were all talking about monopolistic kind of thing, amount of how much can you increase the capacity. So he removed all the restrictions he removed totally. And that made today India what it is. We are today must thank Dr. Manmohan Singh for what has happened so many years now, and where India has now looking at becoming a top 3 countries in the world for in economy and our GDP side. So I think we owe a lot to him, and we respect what he has done, and I'll remember personally my interaction with him. Thank you.
Mr. Kothari, just one more question, and the way you've described it is really beautiful. You know, how Dr. Manmohan Singh was there for the stock market journey as well, the Harshad Mehta scam, etc. I just asked our team to pull out what the Nifty did between 2004 and 2014. It was a 376% rise. And of course, Indian markets have gone from strength to strength. From a capital markets perspective, what do you think are the contributions of Dr. Manmohan Singh?
Dr. Manmohan Singh also liberalized the foreign exchange, like GDR issues coming out from India, allowing the foreign investors to come in here. And I was one of the first one to raise the money for the companies in India as a merchant banker. And he was there, he created the total. Today's what we see, the foreign investors coming in, is thanks to him. You can say that. And today, the thought of Dr. Manmohan Singh, those days we are talking about 91, 92, so many years later also we remember him for the liberalization. I think that is a major thing which he did, and being humble is another one which is a major point of his, and listen to people very carefully.
All right. Thank you so much, Hemendra Kothari, for speaking with us.
All right, well, there you have it. But with that, we shift the conversation and talk about Blue Star, one of the biggest movers in 2025. And right at the top, let's get in my colleague Rucha to tell us a little bit more about why we're having this conversation and what a strong year it's been. Rucha, over to you.
Yes, thanks, Agam. So Blue Star actually manufactures air purifiers, air coolers and water purifiers as well, and as the largest after-sale service provider for air conditioning and commercial refrigeration products in the country. Now let's talk about financial performance. In the first half of FY25, the revenue has been 51,419, has grown about 25%. Net profit has grown by 71%. Now in terms of segmental performance as well, revenue of electromechanical project segment grew by 32%. Now this is a spectacular year for Blue Star, and if we look at the share price, well, in the last 1 year it has grown by whooping 112%, and in the last 6 months it is up about 22%. I just want to highlight quick new developments. The company actually focuses on new product development and also has decarbonization and energy efficiency actions taken for the OEMs. It also plans to introduce new models in the room air conditioner and commercial refrigeration segments. Lastly, talking about the future outlook, the company anticipates commercial refrigeration to stabilize post-October, that is in the second half largely. It has also maintained guidance of 20 to 25% of the top line growth and maintaining about 8.5 to 9% operating margin guidance for FY25. It is also it's also taking actions for the ongoing developments in the international markets, especially in the Europe and the US. Back to you, Agam.
Right, Rucha, thank you so much for joining us and taking us through that. And along with that, we have with us Mr. B. Thiagarajan. He's the MD of Blue Star. Mr. Thiagarajan, good morning. Thank you for taking the time out. Also, apologies, there was a little bit of delay in coming to you. But let me start by, one of those points that Rucha was highlighting, and that was your client's requirement to be more energy efficient when it comes to products. So in terms of that direction, what is Blue Star's current initiative? What kind of products are you looking at? Well, perhaps for this upcoming calendar year, and how could your mix change based on that?
Good morning. It's a pleasure interacting with you. You see, air conditioners or air conditioning systems and commercial refrigeration systems consume a lot of energy. Next is they are also contributed to global warming because of the refrigerants. There are sufficient regulations in place within the regulatory framework. There is an energy labeling program which gets revised or upgraded once in 2 years. And there was Montreal Protocol. Subsequent to that, there is Kigali Agreement, and there is an India Cooling Action Plan. Blue Star, as its strategy, always believed in differentiated product offerings, and thereby we pioneered introducing products which are energy efficient. So as we move forward, as the market grows, you will be aware, India is the fastest growing market for air conditioning and refrigeration products. And we will be doubling the market size within 4 or 5 years' time. And if that is the case, it is important for the industry to work together with the regulators in order to improve the energy efficiency. In commercial air conditioning system, it is not only the product, it is also the building design. How much of green buildings will be brought in, therefore building design, how it can improve the energy efficiency. All our products are designed for energy efficiency or environment friendly, and we have been ahead of the curve in terms of meeting the regulatory requirements. Going forward, I think the energy efficiency norms will be further getting tightened. For example, in January 1, 2026, there will be another energy label change, and usually before 3 or 4 months ahead of that, the companies introduce the next label change products. So we are working on design and development of products, and not only meeting that 5-star energy label requirements, but also super energy efficient products.
Mr. Thiagarajan, then in that case, I understand that the second half of the financial year is seasonally slightly leaner one because of course the seasonality in the winter months. Still, if you could give us an idea about the kind of traction that you are seeing right now, and what are your expectations for maybe the period between January through March as well?
Excellent question. So we had a great summer season. The growth was more than 55%. The festival season for this product category was very good. The room air conditioners, it grew more than 30%. And that demand growth continues. While many other sectors are not doing well at this point of time, the air conditioning industry is happy that the demand continues to be good. Going forward from January to March, what generally happens is you begin launching products for the summer season. So there are multiple things that are happening there. One is the rupee depreciation, and the metal prices and other commodity prices are going up. So you need to balance profitability with the price hikes that are to be announced. Now, obviously, there are multiple levers there. You will redesign the product. You will bring in features which are in line with customer expectation. For example, going by the last summer season, consumers expect super efficient, heavy duty air conditioners, which will perform even at 55-degree plus. And there are young generation consumers who need AI-enabled, Wi-Fi-enabled, state-of-the-art products. So India is a large market. You have to have products at all price points. You have to address the needs of various segments. Somebody wants durability, somebody needs technology, somebody needs at an affordable price. And all these actions will take place. And having said all this, my
Rajan,
expectation
I'm
is...
just going to ask you to pause for a second before I come back to you. I just want to address this very quickly. What we're seeing on our screen right now is 5 IPOs listing today. It's just telling you the health of the primary market of them. And of course, all of them up in the green, showing robust listing gains. The biggest one, though, of course, is with the biggest subscription, 160% upside on a Mamata Machinery. DAM Capital also roaring away, a 48% upside this morning. Transrail, the other one that has seen some excitement, 34% up. Concord Enviro, 15% up. And of course, Sanathan Textiles, 25% up. It's the season of the IPOs. There is no doubt in that. I mean, are these good long-term buys or not is a different question entirely, because, you know, data shows us that 50% of people who subscribe in IPOs do it for the listing gains. Well, listing gains galore and plenty today. No doubt about that. We'll come back with more details on the IPOs and of course all of that on your screen, but I'm going to continue my conversation with Blue Star B. Thiagarajan. Very good morning, sir. Tamanna here. Pleasure as always to have you on NDTV Profit. Great to have you here. Just wanted to get your sense of the demand situation, and I know this is the wrong time to ask you because seasonally this is not the time for demands for cooling solutions. You're saying summer was great. Since summer there are concerns about economy, about demand overall. Are you seeing any signs of that?
Not at all. Festival season, the growth was more than 30%. As we speak now, the demand is extremely good for room air conditioners as well as commercial air conditioning systems. And I was explaining, my sense is that despite the commodity price increase or rupee depreciation and certain price corrections will take place, I think Q4 demand also should be close to 25% as we build up for the summer. We continue to witness the consumers not waiting for April, begin to buy in the month of March itself. So therefore, fortunately, air conditioner industry is doing well.
All right. And Mr. Thiagarajan, would it be safe to assume that a growth rate about 20 to 25% can be on the anvil for Blue Star for even FY26?
I had indicated that we would like to grow faster than the market. We did that in Q2. And I suppose in the coming quarters also, we will maintain that momentum. It is going to be a landmark year. But having said that, I told you, the headwind demand holds up because this category has arrived. But there are headwinds. There are headwinds in terms of rupee depreciation, commodity prices, and supply chain disruptions. And the industry is coping with this and trying to move forward and seize the moment and rise to the occasion. and Blue Star will do so.
Right. So, strong demand, but on the other hand, there is risks of supply chain disruptions and commodity prices. Under those circumstances, do you think that your operating margins could be around the levels of around 8 to 9% as well?
We had indicated that the segment 1 should be somewhere around 7 to 7.5%. Segment 2, we had indicated 8 to 8.5%, and that still holds.
All right. Thank you so much, Mr. Tyagarajan, for speaking with us, and season's greetings to you and yours from all of us here at NDTV Profit.
Same to you, Tamanna. Best wishes to you and your team members.
Thank you so much. Thank you so much. That was B. Tyagarajan, Blue Star, solid company. And yes, we'll be back in vogue, I think, from a market's perspective in the summertime. With the cooling solutions. Okay, our focus now for the next 15-20 minutes is clearly on what is happening with the primary market. I mean, it's quite insane. I want to pull up the 5 window once again. We have 5 companies which have listed, all of them on your screen right now: DAM Capital, Sanathan Textiles, Mamata Machinery, Transrail, Concord, Enviro. If I look at it only very simply from the filter of listing gains, Mamata Machinery on top. Remember, heavily oversubscribed. That's also because of the size of the issue. Manish Chaudhary joining us now. He's head of research at Stocksbox. Manish, thank you so much for speaking with us. How would you assess each of these?
I think the kind of response in the primary market in calendar year 2024 has been mind-boggling. The largest money in the primary market in India, and also if I talk about the global exchanges, we are leading in global exchanges as well on the primary market. So my sense in the 5 IPOs which have listed today, I think Mamata Machinery has listed upwards of 150%. But if someone has got Mamata Machinery, I would be of the view that it is better to book profits at this point in time because the valuation looks stretched. At the upper price band, I think the valuation made some sense, taking account the 16x P on FY24 earnings, because 25 earnings is not a right metrics because the H2 is more heavier as compared to H1. So I think Mamata Machinery was the top pick from our side as well, but the kind of upside has already seen. I would advise booking profits. If I talk about other listings, I feel it's better to move away from Concord Enviro at this point in time, because I think the kind of financial performance and the kind of competitive intensity it is facing in the market, I feel it is better to take a back seat and at least wait for a few quarters to see the performance going ahead. So yeah, that's from my side.
That's a very interesting point that you made out there, Manish, because the area in which Concord Enviro operates in, that is largely with respect to wastewater management, and please correct me if I'm wrong there. And we already have a whole long list of companies which are also on the exchanges, which also deal with the exact same thing. So there certainly is a lot of competition. So Manish, if you leave out Mamata Machinery and Concord Enviro, the one stock among these 5 also which stands out is from the financial space, and that's DAM Capital Advisors. How are you assessing that? We're looking at a 53% premium to this issue price, but the scope, of course, the narrative here is, the financialization of the savings of India. Is that a theme here in this case, and what is your overall assessment of DAM Capital?
I think you have got this right. I think it's a proxy play on the financialization and the equity markets in India. So if I look from a longer term perspective, I feel that DAM Capital should do well. The idea being it has steadily gained market share in the merchant banking business, and I think currently it holds
Okay. Okay, we'll try and get Manish back, but you know, not too shabby on the secondary markets as well. The Nifty above the 23,900 mark, up nearly 1%, and from its lowest point of the day has come up fairly sharply. Smart moves on the markets and you know, you have to look at this relatively, considering that you've not really seen these kind of moves in the recent past. We talked about the Bank Nifty this morning. The Bank Nifty is absolutely roaring, 380 points now up. And you know, I just want to pull up the heat map for you just for a second, very, very quickly, to give you a sense of what is working. It's not just the banks, the Nifty Auto. The Nifty Auto up about 2%. I mean, I haven't seen moves like that on auto stocks for a while. And that's what you're seeing, a Bajaj Auto, a Tata Motors, all of that really moving well this morning. Bajaj Auto up about 3% right now. Eicher, Samvardhana, M&M, the whole lot seeing green after a while. Now, what's leading to that sharp move in auto is really the big question that we need to answer. But even as we look at this, Manish, you know, I want you, let's pick now. We've got 5 listings today. How would you rate them in order of preference from most favorite to least favorite?
I think if I want to rate it from the most favorite at this point in time, I think Mamata Machinery would be the top pick. But again, I would not suggest entering at current levels. I would wait for some dips to enter. I think the kind of customization it needs and the kind of proxy plates on the FMCG and the F&B space, I think that tops my preference. This second I would be DAM Capital. Third, I would rate mostly, I think, Transrail, because it's again a proxy play on the power sector where it is into the EPC of distribution and all. So I think Transrail, comparing it valuation-wise, still holds value. So that would be third. Fourth would be Sanatan Textiles, and fifth would be, I think, Concord Enviro. Yeah.
All right. Well, Manish, we'll leave it at that. Thank you so much for joining us and taking us through your views on the latest listings. Also, in terms of the markets, I want to point out that firstly, it's an expiration. It's a weekly expiration for the Sensex weekly options. Secondly, do remember earlier on, I was telling you about the fact that at least from an index futures point of view, well, FIIs are significantly short. And by significantly short, I mean 88% short and the balance are long, which means that if we do see a sustenance of the strength in the markets, please do not rule out a short covering rally this Friday. And also do remember that over the past 2 to 3 Fridays, things have been extremely volatile. And even in terms of direction, you know, we're starting to see a lot more in terms of pickup. So that's something that those are some technical, parameters that you should keep in mind while trading markets today. But in general, of course, markets are looking good. And well, on that note, let's get in Jyotirvardhan Jaipuria. He's the founder and MD of Valentis Advisors. Jyoti, good morning. Thanks for taking the time out. Your view on the large caps. Let's talk about the large caps at the moment. How are you seeing in terms of valuations? Are they somewhere in the middle, slightly overvalued? Or what's the way forward, keeping growth in mind?
Yeah, so I would say they are slightly overvalued maybe. So if you just look at pure numbers, a 10-year average of PE has been 18. And, they are now trading at somewhere close to 19 and a half times. So slightly overvalued. So it's not necessary market has to always trade at averages or something, right? So to that extent, it's like maybe next year we get some sort of time correction, which will adjust this valuation. I think the key element remains growth, that whether the growth will come back. Our views growth will slow from what we've seen over the last 2-3 years. And to that extent, investors need to temper the return expectation. At the same time, we think growth will come for the large caps. We'll have earnings growth of around 10 to 11%. So probably, that provides the base for getting some sort of return. Just remember, we had 9 consecutive years now, if we include this year, of positive returns in the Nifty. So by law of averages, somewhere you are headed for 1 week here. But we are hoping next year we'll manage a small positive return on the market.
Mr. Jaipuria, very good morning to you. Tamanna here, and great to speak with you at a time when I think we are closing in 2024 in a bit of flux. No one's quite sure what's going to happen next. What should be the strategy now from your perspective as a seasoned investor who's seen so many ups and downs? What should be the kind of plan that average investors make, some of them new in the market, for the next 6 months?
So, Tamanna, I would say one is, keep your return expectation tempered. But what's happened is over the last few years, we've had returns which are abnormal. So don't expect a repeat of that sort of return. Just remember that returns somewhere do tend to average. Second is you have to start thinking a bit longer term, because it's possible next year is not a great year because the markets are just to extraordinary returns we got this year. Third is there could be a lot more volatility than what we've seen in the last few years. Because last few years have been a dream, right? Every small dip you bought in the market, you made money because the market went up after that. Fourth is, next year we'll see more macro factors come into play. It's like, one is obviously Trump starts his presidency on 20th of Jan, and there's a lot of uncertainty on what he does, because there'll be a lot of talk on what he's done, but nobody's sure what he finally does, because most politicians say something before they come to power, and when they come to power, they do something else. But otherwise, there are a lot of contradictory things he said, right? He wants to cut taxes in the US at the same time, keep fiscal deficit under control. He wants to, put tariffs there. But if he does that, then inflation will go up. So those are things which will play out. There'll be a lot of macro factors which play out. And so that is something they have to keep an eye on, because that's not really been one of the concerns for the last many years for the investors.
Jyoti, you've been a keen observer in the healthcare space over the past many years. We've seen some resurgence in the pharmaceutical subsegment specifically. Of course, there's opportunity in the CDMO, CMO market. We also have the US Biosecure Act, where there is a lot of uncertainty around that. How are you assessing this sector, and what kind of areas are you looking at, or rather being interested in?
So we like the pharma space in general. And, one of the sectors we like is what you were speaking about, the CDMO, CRAM, that whole space. We think it's good because, we'll see some move away from China into India anyway. And India is establishing itself as a player. So I think, that is a segment which will grow and which will continue to grow. So a lot of companies here will become much bigger over the next 5 years, 10 years than what they are today. And so it's a sector we like. If the Biosecure Act comes in, and ours was irrespective of the Biosecure Act, we like the segment. If the Biosecure Act comes in, it will be an additional boost, because a lot of people will be forced to then come to India who probably may not be looking at India as seriously. But the way we operate is always we can never time and forecast what government will do. So do we like the space irrespective of government policies? And then if the policy comes in our favor, then it's even better for us. So, that's one segment we like here. The other segment we like is actually the US generic space. So, the US generic space had done badly for the last many, many years. And it started to turn around a bit from last year. And the main reason is that the price falls now are very, very minor. So to that extent, companies are able to actually more or less maintain their margins or even grow a bit with volume coming through. So that is another space which we like. There's been a lot of erosion in value for companies supplying to the US generic market. And to that extent, we think this is a 2-3 year phase at least where these companies will do well. So those are the two spaces we like. We have not really been that bullish on the domestic pharma. We had some exposure earlier when we thought valuations have moved up quite a bit. So we've actually reduced our domestic pharma. But then these are the two segments where we moved all our exposure.
Mr. Jaipuria, that's the view on pharma. I'm just wondering how you're feeling about banking. I think has been one of the relatively less loved stories through the year. Seeing a resurgence today, but I'm not talking about it from a today point of view. Going into 2025, is it a back to basics kind of a view on banking? You go to the big storied players, whether private or public.
It's very interesting because the way we work, we don't really do momentum. Our whole philosophy is what we call the 3 U's. We do undervalued stocks which have underperformed and which are underowned. So banking is coming up on our screens quite a bit, and we started nibbling into banking for the last few weeks. One of the reasons is coming up is when we do valuation, we tend to look at longer term horizon. So if you do a 10-year average valuation across sectors, banking is one of the two sectors which are cheaper today than they are on a 10-year basis. So both if you take a price to book or you take a P, banking today is cheaper than a 10-year average, and it's probably the only sector which is cheaper apart from media. So there are only two sectors cheaper on a 10. So to that extent, valuations are very cheap. The stocks have underperformed quite a bit. So to that extent, it's something which we started to nibble. We think, the banking space will do well next year. There are short-term challenges which we all know, there's some pressure on NIMs. There is, default or there's NPL risk in the MFI space. But, the stocks are pricing that to some extent. We think that the credit growth will be strong, earnings growth will be decent. So we like the large banks, but we also like some smaller banks which are trading at very low valuations. So, here valuations are like sub price to book of 1 time, closer to 0.8 time, 0.7 time. And from here, money can be made if, there's a recovery in this banks, they're trying to clean up their books, and you get a re-rating coming just because you bought them very, very cheap. So for us, we are playing like both of them, some large cap, well-known banks and some, smaller banks, which are currently at pain, but we are trading at very, very attractive valuations.
I have a follow-up on to that one. You tend to veer towards unloved stocks as well. Well, does that mean that you are looking at some PSUs too in the banking space?
Yeah, so, we are doing both PSUs and private sector. And for us, our mantra is simple. Where are valuations? Where do we think, valuations could be 2-3 years later? And so it's a mix of PSUs and private sector. There are a lot of, banks which get hit when, there are 1 or 2 quarters of NPLs coming through. Then they get hit very, very substantially in terms of the valuation. And if we see a reversion coming to mean in terms of, a lot of NPL provisioning is behind us, then we tend to, go and buy these banks because at some point they again trade back to their original valuations.
I'm wondering, and there's so many things I want to ask you, but because we have less time, I'm going to start by asking you how you're looking at the primary markets right now. And are you tempted to nibble into anything which is on offer? And I'm not just talking about the 5 listings today, but even in the recent past, there's a whole slew, many more lined up as well.
Yeah, so Tamanna, for us as a fund, it's like very difficult to participate in the primary market because, the issues are oversubscribed so much that, we don't really get any allocation. So it doesn't become worth our time. But, just in terms of valuation, what we find is a lot of the new IPOs are coming at valuations which are much more expensive than what the existing stocks are trading. And then they tend to trade at higher valuations for quite some time. But at some point, there will be like a reversion where, you have to look at the listed space and the new IPO in the same lens. And quite often, the existing listed companies tend to be much, much cheaper than what the new IPOs are coming at. So this is like a very broad brush I'm giving you. I'm sure there are particular companies which we like, which have got listed recently. But in general, we find that the IPO market is coming at high valuations, and because they're getting oversubscribed, the listings are happening at valuations which seem very, very high.
Yeah, that's an important point for our viewers also to remember that look at the valuations, not just listing gains, that could be optically confusing or misleading. Just as we leave you, Mr. Jaipuria, your 1 or 2 big ideas for our viewers going into 2025, which sectors, which kind of companies do you think we need to look at?
Yeah, so, our thing will be buy stuff which have not gone up. Don't buy the momentum plays of 2024, because typically if you do analysis, what does well in 1 year rarely does well in the year after that. So that's why, we've discussed 2 of the sectors which are probably our favorite sectors into 25. One is the BFSI space, especially looking at banks which are cheaper and which have underperformed a lot. And the second is the pharmaceutical space.
Thank you so much for that, Mr. Jaipuria. And with that, season's greetings to everyone on your end from all of us here at NDTV Profit.
Bye.
Thank you. Thank you. Jyoti Vardhan Jaipuriya, and I think that's a great message to wrap up on, Agam. Don't look for the same winners in 2025 as you saw in 2024. What does that mean for platform companies? What does that mean, you know, for a lot of segments that have been outsized in their excitements? Pharma, I would add in that. Does this mean more of defense, more of rail? I mean, I wonder.
Yeah, absolutely. And of course, you know, as a lot of the other experts have also suggest that, well, some pockets certainly are very, very expensive, but a lot of opportunity in certain others as well. But on that note, it's a wrap on this edition of India Market Open. Up next, you have Ask Profit. Stay tuned in, and we'll be back in just a bit.
I honestly believe that history will be kinder to me than the contemporary media or for that matter the opposition.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the large street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Anushi Vakaria. We'll take you through the next 1 hour of trade. At the start though of this Ask Profit special, we've got an IPO special lined up for you because today is a fantastic day for the IPO markets. You've got 5 listings that have taken place already, and what a stellar listing it is for a couple of them. In fact, let's take a look at how these stocks have reacted making their Dalal Street debut. You have the likes of Dam Capital, you have Sanatan Textiles, you have Mamata Machinery, you also have a couple of others in the form of Transrail Lighting and Concord Enviro Systems, all of them trading in the green at the start, and Mamata Machinery stands out, gaining as much as 150 odd percent, in fact more than that at this juncture, 160% or thereabouts. Sanatan Textiles also listing at a gain of about 31%, coming off the high point just a tad bit, but still trading with gains of about 25%. Of course, we'll come to the market in just a bit, but like I mentioned, this is an Ask Profit IPO special, so in the event that you've got questions about any of these companies or indeed the companies that have listed over the course of 2024, then I would invite you to write to us on that number that you see on your screen, or in fact over the course of this next half an hour you can call us and we'll speak to you directly. But let me introduce Paresh Dattani, who's the chairman and managing director of the company Sanatan Textile, joining in. Mr. Dattani, thanks so much for taking the time and congratulations on a stellar listing. Help us understand at the start, of course this is well documented, but people who are tuning in for the first time, how are you going to use the IPO proceeds?
Morning, thank you for having me on the show. We have a primary issue of 400 crores and we'll be using 300 out of that to pay the debts. 160 crores will be paid of the current company debt and 140 will be from the new debt we have taken for the expansion project which is on in Punjab.
Hi Mr. Dattani, this is Anushi joining in. Want to understand, so you've mentioned about in the use of proceeds that firstly the debt picture is something that we should be watching out for. Along with that, the manufacturing facilities. I want to understand what is the kind of interest savings that we can see from here onwards after the repayment of debt that there is on the cards. From FY25 picture, what is the debt scenario going to look like?
Well, today, when we started this journey, we were at a debt of 0.3 to EBITDA. We, at the end of 2025, we will be holding a debt of close to 900 odd crores on the book. When we finish the project, net debt after paying from the IPO proceeds, we'll be having a net debt of about 1,000 to 1,100 crores on the books. With the expansion coming in, 1 year forward, going forward, when the full project, the new expansion is on fully, we will be at a net debt to EBITDA as 1, which is very comfortable for us.
Understood. Could you take us a little bit through that expansion as well and the timelines therein? As I understand it,
Mr. Dattani, it's not the best environment globally. You've seen exports decline as a percentage of the whole. Does that change over the course of the next financial year?
See, as far as Sanathan is concerned, on the export side, we have constantly moved between 5% to 15-16%, depending on better netbacks. If we are better locally, then we move the needle a little bit to the local. That's the variation that and I think going forward, we will be close to about 10-15% on the export front. As far as the expansion that is on in Punjab, we are adding, at the current capacity, we have in totally in all the three segments going forward, we have a capacity of 223,000 metric tons per annum. Going forward, out of this 223,000, 2 lakh tons is polyester filament yarns. What we are setting up in Punjab, we are going to set it up in two phases. On the first phase, which we'll be commissioning this year entirely, and we'll be adding 255,000 metric tons per year. And in the second phase, we'll be adding another 100,000 metric tons per year. So that will take us our total filament yarn capacity to over 550,000 tons. On the cotton yarn front, we are today producing 14,000 tons per annum, and we'll be adding another 10,000 tons to that.
Well, that's fair to understand, Mr. Dattani, but considering these capacity expansion and the export mix going higher, what is the revenue and the margin picture that we should be looking out for in the coming years?
As far as our Punjab expansion is concerned, ma'am, we are setting it up there because it's an entire market which is there, which is already there about 1 million tons a year. We are setting up about 25% of that. So it's a set market for us. We are already supplying to the market there, and we have a market which is ready-made, laid out for us. So nothing from there will be on the export front. But yes, going forward on the Silvassa plant, we will be increasing our exports. Whatever we were selling up north, we will push it to the exports and increase the export percentage share.
Just a last point that I want you to leave us with, just a picture of how the industry is likely to be next year. What is the kind of pressure that you have, if at all, on the pricing front? Will you be able to improve margins on that front? Is there any pressure that you are dealing with right now? Do you see that easing out in the next financial year? And is 26 going to be, or rather is 26 going to be better than 25?
Yes, we have been consistently doing, if you look at last 3 or 5 years, we have been doing an EBITDA of about 9.78%. We will be close to that this year, and going forward, we are on course to improve our EBITDA. We are trying to work on that once the new project in Punjab gets moving along. And we hope to commission that. We start commissioning that by end of March, April. And it'll take us about a quarter or so, or maybe a couple of months to ramp up the entire facility there. That will help us improve our margins also.
Fantastic. Mr. Dattani, exciting times for you, and congratulations once again on a stellar listing, and look forward to speaking to you in the new year.
Yeah, thank you very much, and I want to just take this opportunity to thank all the shareholders, and that only motivates us and my team to work harder in the future, and we are going to do that.
Fantastic.
Thank you very much.
Thank you so much, Mr. Dattani. All right, like I said, this is an opportunity for you to ask questions on IPOs. You can talk about the latest listing that we just spoke about, or any others. We've got Ashish Maheshwari, Director at Arihant Capital, joining in, as well as Kushal Gandhi, who's Technical Analyst at Stocksbox. Thank you so much, gentlemen, for taking the time. Before we get into IPOs and a few of the questions that come through, very quickly, Kushal, I want to come to you on how the market's looking right now. Globally, we're seeing a little bit of a tepid scenario in terms of participation. What is a kind of picture that you have heading into the end of the year?
So I mean, the markets look muted. I'm not expecting much of fireworks as of now. I mean, over the last 3 days, we've definitely seen some volatility compression. So we're seeing a positive outlook, as a result. But I feel 24,200 is a very critical resistance going forward. As far as we successfully and decisively close about 24,200, we might see an uptick towards 24,800. But again, markets have formed an intermediate top near 24,800. So I think 24,200 and 24,800 are two levels to watch out. if we are failing to sustain beyond these levels, if we fail to sustain above these levels, we might see some selling pressure continuing.
We've got one question coming in from Rajan Iyer. Rajan, I'll come to you in just a bit, but interestingly, it's being called 2024 is being called the year of IPOs, and the reason why is that we've had 1.8 lakh crore rupees that has been raised in main board IPOs in 2024, 95 main board IPOs during the course of the year, and that's quite a stellar number. Of course, considering the kind of participation that we've seen from you, the retail investor, it's very important that we get additional supply. And so from that perspective, it's a very good thing that we're seeing so many new companies coming through. We've got the first question, as I mentioned, coming in from Rajan Iyer. He's got AFCONs, which he got allotted during the IPO stage. He's looking for the prospects. Ashish, did you track this at the IPO point? Did you have a note out, or did you look at the coverage of this company? And if so, what is the kind of view that you have? Would you hold on for the next 3 years?
It's a AFCON's
infrastructure
issue was concerned. So from 420 rupees, I think, was the IPO price, and in spite of not that encouraging oversubscription which generally these kind of companies get, I think stock has done reasonably well. I think issue price was 463, and it came into the discount also. I think touched 420, but it still now managed to do well, because ultimately the institutional investors are understanding the size of AFCON's infra operations is quite large. If you see typically wherever L&T bid for higher value contract, even AFCON's is also one major player in the same segment, and they bid shoulder to shoulder with for larger projects. So fundamentally company is good, and in my view, if you are bullish on India infrastructure spending and particularly government spending, and AFCONs will continue to do well. So my suggestion will be, if you are allotted shares in IPO, remain invested, and maybe next 1 to 2 years is a long-term very good growth story.
So a positive view that we are seeing for AFCONs, the suggestion that one should continue to remain invested in this. Another IPO query, this is on the recent listing, today's listing. In fact, Karthik from Pune wants to know if it's the right time to add more to DAM Capital. He got allotted one lot in the IPO. Ashish, coming back to you on this one. What's your view on DAM Capital? It got listed at a 39% of premium today. Should he continue to add into this position?
See, even if we see DAM post-listing, I think the still market cap is 600 odd crores. And the way we have seen other players in this segment, and let's talk about Nuvama Wealth, the kind of valuation, or Anand Rathi Financial Services, the kind of valuation they are doing or they are fetching from the market, DAM will certainly do much better even from here, because they are having very good pipeline of IPO, because last year it was 1.6 trillion rupees IPO. Now next year is going to be 2 trillion Indian rupees IPO. So their business is very flourishing in nature, and very good pipeline these companies are going to have. So DAM Capital is certainly a buy again in my radar, and in my view, this stock has even potential to give 50% upside in next 1 year from here.
From this point, and the stock is up as much as 50% on listing day. A question coming through from Satya. It's not really a specific question on an IPO, but Ashish, of course, we've seen tremendous oversubscription. Even the 5 listings that took place today, all were oversubscribed, the least of which was an oversubscription of 10.7 times. What he's asking is, how does he increase the chances of getting allocated during an IPO? And I think this is a question that a lot of people have. So they tend to use as many accounts as they possibly can. I've heard this in a household. They try from 4 or 5 accounts if possible, and they try and get an allocation. But the question he's asking is, should he try in the HNI component, where you have sub-limits within that as well? I think 2 lakh is one. And you have the retail component. Which is the better opportunity? I guess it would depend on the IPO.
Yes. Also, like there's a retail, there's SHNI, there's a BHNI. There are three segments there. So even the probability goes up when you upgrade yourself from retail to SHNI or BHNI, because there's a 2 lakh limit, then there's a 10 lakh limit. So the higher you go, the probability goes up. But I think the best will be to have demat accounts and of all your family members and apply in multiple code, because it's a lottery. So if you'll apply 5, 10 and at least numbers, then you have a probability of winning that lottery. This much I can say, but there's no other formula other than applying in multiple codes.
Right, that's an interesting take that you have there, Ashish. But the focus today remains on the IPOs which have marked its debut on the exchanges today. Tanvi from Jaipur has got allotted one lot of Transrail, and if you look at the Transrail performance, it got listed at a premium of 37%. Wants to understand whether she should continue to hold on to this one or sell. Ashish, coming back to you on the IPO related question on Transrail.
Yeah, Transrail again has given a quite decent return. If it's 32% upside is there, and even much higher than what the grey premium was, around 100 rupees, and stock is up by 139 rupees. And again, a very good company as far as Transrail Lighting is concerned. And they are not only focused only India, but they are doing a lot of projects in Africa and other part of the world also. And this is not a lighting company; they do projects related to construction of this tower, transmission towers, etc. So if you ask me, again a good EPC company and good management also. And in my view, this is again a stock which you can continue to hold for a longer run, because of the kind of return we have seen in Kalturu Power and KECs, etc. Transrail will also continue to do well in long run. So don't be in hurry to book profit. Remain invested in quality stocks.
Okay. Enviro. Okay, so we're talking about Concord Enviro Systems next. I'm not actually sure. Let me actually try and pull this up. In the meanwhile, if we can just very quickly take another question. I'm talking about Enviro Infra Engineers. Sorry, this is a different one. Yeah. So Enviro Infra Engineers IPO. We've got Hemendra Nanavati, who's got the next question. He's asking on WhatsApp. He's got 1,414 shares in the HNI category, and he's still holding. Coverage on this, Ashish, have you looked at Enviro Infrastructure Engineer?
Yeah, this was again issue where a lot of investor interest was there, and it was given at quite attractive valuation also. So if I see the numbers wise also, they have just doubled their profit from 23, 24, they were almost 100 crore. Even their last quarterly numbers also came, which were also quite good. And if you see their company, the company profile, they are into waste water management. So they take projects from municipalities and do those kind of projects. They have also raised money for a big project which they have got in Mathura from Mathura municipality, etc. So company is doing well in my view, and this is a sector where we have seen excellent return from Vartech, Babak, etc. And not too many competitors are there in listed space. And in my view, this is again a stock very good for the longer term portfolio.
Staying with this theme now, you've spoken about Enviro Infra, you've compared it with peers like Vartech, Wabag and all that. Another listing which marked today was Concord Enviro, again in the same space that we are seeing at. Is this the right time to buy Concord Enviro? This is what Priyanshu wants to know. So in the peers, in the wastewater and sewage plant system, if we see, which is the best pick according to you, and if you can give whether this is the right time to buy into Concord as well?
So Concord Enviro, only one problem was that the issue was priced quite rich. So if you see, it was a pre-IPO, it was offered only also at 30 price earning multiple. So whatever the maximum upside was there, this was already captured in the IPO price, and this is the reason issue was oversubscribed by only 10 times. Still, I'm happy to see these kind of gains, because before listing it was expected it will open at 70-75 rupees premium only. So my suggestion will be to keep a stop loss here, maybe at 800 rupees, and you can continue to hold.
That's the view on Concord. Kushal, sorry to keep you waiting. Unfortunately, I mean, very little in the way of data that you have about these new listings, but I will ask you, question from my end. Listings perhaps in the first few months of 2024, anything is looking attractive at the current level, something that you have enough data to talk about?
So in the recent times, we've been very bullish on the young guns, and as disclaimers, we've been pitching a lot of the IPO ideas in the recent time, and they've been doing fantastically well. So I feel going forward, something like Enviro Infra can do well. After a 90% significant rise, we've just seen a 23% correction. So I think it's a very classic sign that the savvy investors continue to hold their positions. So we're bullish on EIEL going forward for the target price of 388, and we advise to maintain a stop loss at 306. Another stock idea is Arcade Developers from the IPO space. Again, it's forming a nice IPO base with a cup and handle formation. So, some strong technical evidences for the stock to trend up. So bullish on the stock for the target of 190 followed by 220. And we recommend to maintain a stop loss at 160.
Okay, fantastic. All right. It is time, I think, to shift gears and move back to the secondary markets and stocks that have been listing for some time, because quite a few of you actually, I have one more question. Dr. Ravinder is writing in from Nandyal, and have we spoken about Mamata Machinery?
No, absolutely.
We haven't.
Yeah.
So incidentally, this is a question from Dr. Ravinder, who's writing in from Nandyal, and he's asking about Mamata Machinery. He says that he's got an allocation. Should he hold or should he sell? Listing gains of 159%. I can't remember the last time that I said this. What's the view on the fundamentals? Ashish, is there potential for even more gains from this point?
If you see even subscription wise, 49 lakh number of applications this company has received in IPO. So you should be lucky that you have got a stock of Mamata Machinery. And if we see business model also, they are making machineries which are used in for making pouches and packing bags, etc. And they are not only an Indian player; they are global player with a lot of exports they are doing in various parts of the world. So very niche player, and not many competing players are there which can match profile of Mamata Machinery. So in my view, you should remain invested in Mamata Machinery stock, because wherever there's some nicheness is there, they get a lot of premium even going forward, and they attract higher price earning multiple also. So my suggestion will be to remain invested in Mamata Machinery.
Did I ask you about Sanatan Textile? I'm not sure. We had the management, but did I ask you about it?
No, we haven't spoken about it.
Okay, so there is a question, when to sell? Mustafa is asking when to sell Sanatan Textile. Would you say that listing gains 20+% is a good opportunity to sell?
If you ask me, like, first of all, this shows now that investors are even going to look companies in textile which is considered to be a commodity business if the size is there. Sanatan is again a company where decent size is there. If we see the polyester yarn capacity, they'll have almost 5 lakh ton, and the leader, which is a Reliance Industries, having 2.5 million ton capacity. So if size is there, certainly investors will like to buy the stock, and which is the thing that in this IPO, this is the reason so many investors have applied. In my view, you can keep a stop loss of say 375 so that you don't miss out on those listing gain, and then continue to hold the stock.
We've got an interesting question, and this is not something that we normally do, I must point out. We stick to one query, one stock per viewer, but then since I've invited questions on IPOs, we've got a number of stocks, Ashish, that has been mentioned here, right? This is Kamla Yamanuri's question, and she's picked up allocation in a number of IPOs. You don't need to speak about all of them, but things that stand out to you that should be held. She's got CE Water, she's got Bajaj Housing, she's got PN Gadgil, Vishal Megamart, IGIL, and Tata Tech. Each one lot, I think, each, right? So should she hold on to these? Which of these should she exit?
I must congratulate very lucky investor.
I
So
agree.
almost wherever their miracle is stone in their hand, wherever they put in, money is made, or they get IPO location as something really.
You know, Ashish, they say in I don't know which language, but my grandfather has spoken about this. It's kaipunya, right? So you have blessed hands. When you drop a seed, a plant grows. This is effectively the case in the primary market.
Yes, because I have yet to cross someone like who has got so many allotments. So I'm assuming he's having many family members. That is why they are applying in many names and getting so much allocations. Anyway, so I think my top picks will be again here the PN Gadgil and Vishal Mega Mart. In my view, you can continue to remain invested. And IGI, I think also they got allotted. Yeah, so IGI will be my third pick here because this is again a very unique company which is having monopoly and certification of diamond quality, etc. So they will also continue to do well. So in fact, if you ask me, all the IPOs which you have got are of good quality companies, but these three are my pick in long run.
All right. And maybe at some point, Kamla, you can send us a message telling us how you figured out getting allocation in all of these IPOs, or maybe you'll keep that a secret, who knows. If you want to share it, do let us know, and I will tell the rest of our viewers after this very quick break. Ashish and Kushal, do stay with us. We'll be back on the other side to take all of the other questions. By the way, we'll be opening up the phone lines and the messages, of course, for you to take questions on existing shares or basically secondary market questions. We go back to the normal Ask Profit after this very quick break. Do stay tuned.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes.
जनता के प्रति, देश के विकास के प्रति उनका जो कमिटमेंट था, उसे हमेशा बहुत सम्मान से देखा जाएगा। डॉक्टर मनमोहन सिंह जी का जीवन उनकी ईमानदारी और सादगी का प्रतिबिंब था। वो विलक्षण सांसद थे। उनकी विनम्रता, सौम्यता और उनकी बौद्धिकता उनके संसदीय जीवन की पहचान बनी। मुझे याद है कि इस साल की शुरुआत में जब राज्यसभा में उनका कार्यकाल समाप्त हुआ, तब मैंने कहा था कि सांसद के रूप में डॉक्टर साहब की निष्ठा सभी के लिए प्रेरणा जैसी है। सत्र के समय अहम मौकों पर वो व्हीलचेयर पर बैठकर आते थे, अपना संसदीय दायित्व निभाते थे। दुनिया के प्रतिष्ठित संस्थानों की शिक्षा लेने और सरकार के अनेक शीर्ष पदों पर रहने के बाद भी वो अपनी सामान्य पृष्ठभूमि के मूल्यों को कभी भी नहीं भूले। दलगत राजनीति से ऊपर उठकर उन्होंने हमेशा हर दल के व्यक्ति से संपर्क रखा, सबके लिए सहज उपलब्ध रहे। जब मैं मुख्यमंत्री था, तब डॉक्टर मनमोहन सिंह जी के साथ राष्ट्रीय और अंतर्राष्ट्रीय अनेक विषयों पर उनसे खुले मन से चर्चाएं होती थी। यहां दिल्ली आने के बाद भी मेरी उनसे समय समय पर बात होती थी, मुलाकात होती थी। मुझे उनसे हुई मुलाकातें, देश को लेकर हुई चर्चाएं हमेशा याद रहेगी। अभी जब उनका जन्मदिन था, तब भी मैंने उनसे बात की थी। आज इस कठिन घड़ी में मैं उनके परिवार के प्रति अपनी संवेदनाएं व्यक्त करता हूं। मैं डॉक्टर मनमोहन सिंह जी को सभी देशवासियों की तरफ से श्रद्धांजलि अर्पित करता हूं।
Prime Minister condoling the loss of Dr. Manmohan Singh. We've been speaking to frontline voices from the markets, from the banking sector, former governors of the Reserve Bank of India speaking to NDTV Profit all morning, speaking about the architect of India's modern economy, India's liberalized economy. It is perhaps because of what happened in 1991 that we're seeing what we're seeing today. India at the 4th place in terms of the size of economy, 4th largest economy in the world, 7 times the size of what it was in 1991. By the way, we have opened the phone lines and we've got our first caller for the day on Ask Profit, and we've got Gopal who's been waiting by. He's called us from Bengaluru. Gopal, thanks so much for your patience. How can we help you today?
Thank you. Thank you for taking my call. I have a share, Asian Paint share,
yes,
of around 181 at the price of 3190.
Okay.
I wanted to know when should I buy it to average out, because now it is almost 2,200. I'm waiting like whether it go below 2,200 or should I buy at current price?
Okay, help me understand a couple of things, Gopal. Over what period did you acquire this and what was the thinking?
It's almost a year, more than a year now.
Okay.
Because I bought it for a long-term basis.
And how do you define that long-term?
It may be like 2 to 3 years.
Okay. Okay, and you don't have any of the other paint companies, right?
I had, but I sold it out.
Got it.
Like in Indigo Paint I had, so that I sold.
Okay. Okay. Ashish, this is a question on the fundamentals. Bought Asian Paints at elevated levels, and I think a lot of people have done that. This is something that was considered portfolio stock. People are questioning that at this juncture. It's down about 33% odd in 2024. Would you suggest an entry at this point? Would you suggest an alternative strategy?
No, I'm bearish on Asian Paint for quite some time. Again, the reason is Grasim Opus Paint, because the way they are entering pan India and eating the market share, they will only give more and more dent to Asian Paints, because Asian Paint is again in decorative segment and Grasim is also in same segment, and Grasim has a very wider reach and deep pockets and the kind of incentives they can give to last mile dealers network. Asian Paint, because up till now they've enjoyed monopoly kind of position in this, so they will not go to that extent which Grasim is going or can do. So this is the reason I'm quite bearish on Asian Paints. In my view, the kind of performance which was there in September, where net profit just became half from June quarter, this kind of trend will continue, and now growth is very difficult for this company. So my suggestion will be, instead of Asian Paints, you make some position in Grasim for next 2-3 years target. Next to at least for a couple of years, you will see surely 3,200 plus in Grasim in next couple of years.
Bearish view that we have on Asian Paints, but with that we have another caller joining us. I believe it's Ajay from Andhra Pradesh. Hi Ajay, how can we help you with?
Ajay, can you hear us? Okay, we've lost. Let's go to the next WhatsApp question that we have.
In fact, we have another question from Rishabh from Mumbai, and he's holding about 402 shares of Tata Power. This is at a price of 428 and wants to understand whether he should continue to hold on this one or sell this. Kushal, I'll come to you for this. What's your outlook on Tata Power? How does it look on charts?
Well, looks, it's been exhibiting a sideways trend, but again, the levels of 400 to 390 is a very excellent demand zone, and we've seen multiple pullbacks from this area. So I would recommend to hold these positions with strict stop loss near 370. And yeah, I mean, if you're seeing some up move above 445, we might see further upside towards 490 odds.
The next question is on Time Technoplast, and this is a question from, okay, I'm not able to get the name, Muiz Ansari. Muiz Ansari's got this question. He's planning to hold for 10 years. Is it worth buying at this current price? The stock is up as much as 170% in 2024 alone. Ashish, on the fundamentals, would you buy right now?
See, as far as fundamentals are concerned, they are quite robust. If you see it live in the last 2 quarters, they made around 170 crore kind of profit. And at the 10,000 crore market cap company making almost 350 crore profit is quite reasonable. Besides this, one big breakthrough which they have got is the fiber made CNG cylinders. So you don't need that steel or metal cylinder anymore. It will be more fiber based cylinders where they've got breakthrough, and there's a talk for QIP coming soon in Time Techno also. So multiple triggers are there, and if you are a real long term investor, continue to remain invested.
Okay, well, that's a view for Time Technoplast for a long-term perspective. Moving to the next query, it's from Nitin Paul from Ooty. He bought Indian Hotels at a price of 180. This was during COVID. He's already sold about 50% at profit of 700. So we're seeing quite a bit of profit, a long profit in this one. Wants to understand whether he should continue to hold to this levels or buy more for long term. Coming to you, Kushal, on this one, what's your view on Indian Hotels, whether he should continue to add in this position?
I would invite him to sort of just keep holding his position and not to average or probably add more positions at this current juncture. The stock looks a bit extended, so I anticipate a minor pullback towards 805 to 800 levels. So I think that's an ideal level to enter, which would also offer some lucrative risk to reward opportunity.
Okay. I'm guessing you don't have a view on Sanatan Textile, right? Kushal?
No, I don't.
Yeah, that's what I was trying to tell one of our viewers who's seeking a view, Mustafa. Mustafa, it was listed today. Obviously, we're going to have to wait for some time for Kushal to have a view. Meenu from Trivandrum is asking for which pharmaceutical company is a good pick at this juncture for the long term. And several come to mind, but what Ashish is picking is a question. Ashish, which would you pick right now?
See, there are so many options are there in this pack, but I like to go with the frontline companies only. So my session will be to look at companies like Natco Pharma or Indo Pharma, where I see good potential because the kind of their new drugs pipeline is there and the numbers which are coming, they will give you much better return compared to other pharma players.
Something like a DRL or a Cipla?
Yeah, they have also done reasonably well, but in my view, my picks will give you much better return.
Understood.
Understood.
Natco, you see, they've given 70% return in last 1 year.
Yeah, true.
So the next, if you are looking at moving from the pharma space to the IT space, the next question is from Deepak from Noida. He wants to understand the long-term view for LTI Mindtree. He's had 50 shares. This is at an average price of about 3,500 accumulated over the last 7 to 8 years. Again, wants to understand from a 3 to 4 year perspective whether he should add more for long term. Ashish, coming to you on this one. What's the view for LTI Mindtree?
Yeah, LTI Mindtree again over a period of time has delivered very good returns also. Though from 6,700 mark where that we have seen stock is languishing in this range and has not given very good returns, because anyway this sector if you see except few frontline and few mid cap stock, none of the stock have given any sort of return. Like last 12 months your chart is also showing -9% kind of return. But again, company is doing well, nothing wrong fundamentally. Only thing is sector is not in that great demand, and this is the reason this stock is also languishing between 5,500 to 5,900. But long term prospects are quite intact in this company, so keep a stop loss of 5,400 and remain invested.
Hold on to LTI Mindtree. It's had a rough month of December. Kitex Garment is the next stock we're talking about, and this is a question from Pradeep Kumar. He's calling us from Kerala. Morning, Pradeep. How can we help you today?
Good morning. How are you, sir?
Very well, sir.
Thanks. Actually, I would like to know more about, little about the Kitex. I think I bought from the top, and recently, it's falling down like every day. Yeah. So it's the best things to keep or sell, or need to add more.
Okay, because the stock is done incredibly well. You seem to have caught the top, as you've pointed out. What was the kind of outlook that you had? Did you plan to hold for less than a year, Pradeep?
I don't mind, because right now I think I lost a little bit over in my target. So the best thing, I would like to take a decision from the people from you. Take a decision to sell out or buy to make an average.
Got it. Okay, so I got your question. Kushal, let me come to you on this stock. He's bought at levels of 860, elevated levels as he's pointed out. Would you buy at the current juncture and average your cost, or would you hold? Would you exit?
Advise him to exit his positions because simply if you see the stock has almost gone up over 300% since August lows, and right now the intermediate trend it's becoming weaker. So I feel that the selling pressure might continue for a while. So I would sort of advise him to exit his position at the current market price.
Okay, text comments. But next, moving on to the next query is Satyajit from Bengaluru. He wants to understand the outlook on CEAT. He's purchased it at a price of 3,271 and wants to understand the approach forward. Ashish, coming to you on this one, there have been quite a bit of headwinds in the rubber industry for tire makers in general. What is your view on something like this?
Before this, can I add some one more point for Kitex Garment investor, like if he is still online?
Okay. Yeah, please go
ahead.
So
one mistake that all investors typically do is whenever the momentum is there in the stock, we try to onboard at that time. Like Kitex Garment also you bought at the peak because at the time news related to Bangladesh, exports related issues, etc. came. That is why we entered this at this price. So typically retail investors should not try to onboard the stock when the stock is at 52-week high or when some positive news flow is there. So if the news flow is there, then you can only do trading. The best time to buy Kitex was when it was languishing at 200 rupees, because you are also from Kerala and this company is also from Kerala, so maybe you know more about it. But never buy a stock from investment perspective when stock is at 52-week high is my point of view. So otherwise we always will remain struck in these kind of plays and take plenty of time to exit. Now, as far as CET is concerned, again, this is a stock which has given very good return to investors in last 1 year, and one of the best performer, I think, this stock after MRF. And these tire companies will do well because again, rubber prices are quite in control, and the way there's two-wheeler, four-wheeler, and EV segment is again picking up. Tire is something like which is now consumption theory, and this is the reason these stocks are doing well. Though stock value has appreciated in last 1 year quite a bit, but fundamentally a good company to hold in long-term portfolio.
All right. S. Radhakrishnan is calling us from Mumbai, and he's got an interesting question on BSE Limited, which he's bought at an attractive price. I'll let him tell you about it. Radhakrishnan, good morning. And when did you start acquiring BSE? Congratulations on the kind of wealth that you've generated.
Thank you so much for taking my query. Actually, I have a question with two parts.
Okay.
The first, I would say, I bought this around 850, almost a year ago, and there was this thing. I had around 200 shares.
Yes.
And in another account, I have another 200 shares.
Okay.
When the buyback was on offer, it was around 1080, if I recall correctly. That was the buyback price.
Okay.
So I offered one lot of 200 from one account.
Yes.
And the normal thing is, what happens is they take about 8 or 10 shares maximum. But in this case, what they have done is the entire 200 shares have been taken away.
Okay.
There is no communication from BSE. Normally, a letter comes from the company that offers a buyback, that we have taken so many shares from you under buyback scheme, and the remaining are credited to your account.
Right.
Now, I have not received any intimation from BSE Limited.
Right.
I tried taking up this issue through SEBI also, but there is no response.
Okay.
What am I supposed to
But
do?
did you get the amount? Was the
the
amount
has been
credited? The
Yes,
amount was
the amount
credited.
has been credited. Yeah. But normal course, no company, takes almost 100% of the buyback.
Did you tender all 200 shares?
Yes, I did.
Okay.
The idea was to give them 200 so that normally they take 8 plus 8, maybe 16 shares.
I understand that. But then if you think about it, and if you were to think about any other market, Mr. Radhakrishnan, you would say that if you were selling 200 units of a product, and if you said that you would put all 200 units on offer, and if a buyer were to take all 200, you can't possibly say that, no, I intended to sell only 15, but I put 200 up. So, but
I'm absolutely not disputing that, sir. I'm not disputing that. They have every right to take all the 200.
Yes.
But this has never happened in the past. As far as my knowledge of the share markets go,
yeah,
this has never happened in the past, number one.
Yeah.
Number two, there is a lack of transparency on the part of the company that is buying the shares back.
Okay.
They have not communicated anything, how much they have taken. So how am I to know whether the company has taken or some intermediary in between has gobbled up?
I get your perspective. And since I am not as experienced as even perhaps you are, or even Ashish is, let me go to Ashish on how to deal with something like this. Ashish, is this something that you've come across? And what is the recourse here? Is there a recourse?
No, it is again a surprising fact because whenever a company do a buyback, they do proportionately. So I agree with the investor. It's like he has also not come across to such instance earlier, because if 100 shares are tendered and like you can always get these shares totally buyback if number of shares are less and the company wanted to buy more. So, but I think that issue was oversubscribed because it was last year, if I recollect, in September 23. So first of all, like there's no intermediary like who can do, some sort of manipulation that to get your 200 shares, they will do all those things. Only thing is we need to take up this with company only, that is BSE Limited, that you need to write to them. Also there's investor grievance cell number which is also given, and their email ID is also there on the website where you can post this message like whatever happened with you. And as there's a listed company, so they need to disclose in their quarterly disclosure whatever investor grievances were there and whether they are resolved or not. So I'm sure you will get reply. Just write to investor grievance cell of BSE.
Fantastic. I hope that answers your question. Of course, we've probably not been able to resolve it to the extent of what you were looking for. But very quickly, let me ask you, Ashish, if you bought at levels of 850, would you hold on at this juncture? We're talking about significant gains right now.
Yeah, I think exchange stocks are duopoly. If you see BSE and NSE, there are only two options in India to trade, and the way trading culture is now, increasing in India and Indian context, and the way money is being raised, you can't go wrong in exchange stocks. Though this metropolitan stock exchange news, etc., has done some damage in the price in short term, but in my view, this is a very good long-term play, and you can surely hold this for 6,200 rupees, which is my target in 2025.
Got it. Mr. Radhakrishnan, of course, we've probably not been able to answer the question that you had with complete clarity, but hopefully this has helped you in any case. Manoj has got the next question. Manoj is calling us from New Delhi. Hi, Manoj. How can we help you today?
Yeah, hi. So I have one question regarding Bajaj Housing Finance Limited.
Yes.
Yeah, I have this shares for 500 shares I have at 153.66.
Okay.
And currently I am at a loss right now. And today, as of now, it is trading at 127.45.
Yes.
I can hold it for a long term. But I'm not sure about how long I should hold and what should I do with this current stock.
Manoj, what is the definition according to you of long term?
Sir, I can hold it for around 4 to 5 years. Probably.
Okay, so it's very long. Okay, and when you bought it at 153, 154, what was the thinking? Did you like the company? What the company does? Did you look at the fundamentals of the company?
Yeah, so actually I have association with Bajaj Finance and Bajaj Finserv. So I have these stocks. I'm already in profit on these stocks. So being from the same family, I probably betted it on that it can give me a return in long term. But right now, it has been a constant downstream since then.
Yes, no, that's a fair point that you're making. Let me take this question to Ashish. Ashish, you kind of made this point already early on in the program with another stock, but Bajaj Housing also bought at slightly elevated levels, 153 or thereabouts. But the perspective is for the next 4 years. Would you use opportunities where they arise to accumulate more of this stock?
See, there are a couple of things. One thing is from the IPO price, as the oversubscription was so much, this was euphoria to buy this stock like there's no tomorrow. If you recollect the first few days of trading when a stock almost touched 185, 190, I don't know what price it touched. And from that time, we have seen those who were smart investors, they offloaded it. Because the price to book value, first of all, it was already offered at very high valuation, and when you are getting a price to book value of 20 times and I think 18 or 20 times when it reached that peak, it was very overvalued only. And from that level, we have seen that institutional players exited and retail player mopped this stock, assuming this will go to 300 in short term. So this is the pain. So until unless somebody will start accumulating the stock, stock will remain under pressure. So maybe in my view, this stock can even drift up to 110 or 105 also in coming time.
Got it. So that might be a better opportunity to look at. It is time to hit the rapid fire segment, gentlemen. Kushal and Ashish, this is where we throw as many questions as possible at you over the course of 2 minutes, and hopefully we can answer as many as we can. Kadir has got the first question. Century Ply is the stock that we're talking about. Bought in an average price of 300. Long-term fundamental view is sought. Would you hold, Ashish?
Hold, certainly a very good company.
Okay. Jamna Auto want to invest 2 lakh rupees. Jitendra wants to know, Kushal, on the charts, would you invest 2 lakh rupees at this point?
No, it's definitely avoid.
Avoid. Titagar Rail is the name of the counter. Vijay Reddy wants to know, thinking of holding, buy price is 1,114. Would you hold on, Ashish?
Yeah, I'd like to remain invested with a price target of 1250 in mind.
Okay. Coal India is the name of the counter. Ankush wants to know, he's bought at a price of 450 rupees a piece. He's looking for an outlook for the next 1 to 1.5 years. Kushal, on the charts?
Negative view as of now, but I would want to sort of start investing once the stock closes above 460 odd levels.
Okay. Bharat Thareja wants to know about JSW Steel, bought at a price of 1,052. He's got 200 units of the stock. Stock is currently trading below his buy price. Would you hold, Ashish?
I'm not that bullish on metal pack, so I like to exit.
Okay. Zomato's name of the counter, bought at levels of 47. Wow, that's a great buy price. Would you hold? Long-term investor Sanjay wants to know whether to hold. Ashish?
Yes, I like to remain invested in Zomato.
Okay, Amber Enterprises, it's currently trading at 7,000 plus. Would you buy at this point? Manikanta wants to know, Kushal, on the charts, would you buy?
We want some pullback towards 7,000 odd levels.
Okay, that brings us to the end of this edition of Ask Profit. Thank you so much, gentlemen, for taking the time. And viewers, thanks so much for tuning in. Do stay tuned. Lots more coming up over the course of the day. This is NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Long Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Hello and welcome to KYC, a brand new show on NDTV Profit. And in this fast-paced world of stock markets, investors are bombarded with information, but what they often lack is a deep comprehensive understanding of the companies they invest in. Know Your Company is a show designed to give you regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. And today, we talk about technology company Orion Pro. Now, talking about Orion Pro, this is another one of those companies which has actually done very well over the course of the last many years. And in terms of focus, as I've already mentioned, that the company is in the technology space. In fact, it is a global provider of IP-led products, platforms, as well as services. And well, essentially, in terms of what it does, it enables enterprises to accelerate that digital innovation. Moving on, if you just consider what areas it focuses in, well, it serves the banking, mobility, payments, and the government sectors. And that said, even in terms of your overall revenue pie, we have software services contributes to about 2/3 of revenue, and the balance comes from equipment and licenses. But as we always do in the show, well, what we do in general is that we take a holistic view of the entire company in terms of the kind of growth they have seen in the top line, bottom line through the income statement. We talk about the balance sheet, cash flows, as well as return ratios. And among many other factors, we also highlight shareholding, street credentials, street coverage, as well as valuation picture to give you an idea about how the company has done. And we also give these companies a thumbs up or a thumbs down in terms of ratings, and then we total it up to tell you what the company is all about. So, well, of course, in this case, to assist me with taking you through these many parameters, we have with us who's Rucha, who's also going to take us through everything that we need to focus on as far as Orion Pro is concerned. Rucha, thanks for joining in. Let's start by taking a look at the growth for the revenue and the bottom line, how things panned out here.
Right, so as you rightly mentioned, this one is a software company and has really done well. But let me straightforward move to the income statement for FY24. Revenue is at around 887 crore rupees, which implies a 3-year CAGR, that is compounded annual growth rate of 33%, which is a very healthy number. EBITDA is at around 190 crore, implying a 3-year CAGR of 32%. Well, profits are at 143 in FY24, but mind you, in FY21, it were a net loss negative of about 90 crore, moving on to positive 143 crore in FY24. So income statement check is a clear thumbs up, Agam.
Right. As far as the balance sheet is concerned too, it's on a steady footing, because if you consider the shareholders' equity, that stands at 54 crores, but which is not a very large amount. But when it comes to its gross debt, that stands at around 23 crores, which is very small, as against cash reserves standing at around 330 odd crores. In fact, even on a net basis, its cash stands at around 309 crores. So when it comes to the balance sheet, there doesn't seem to be an issue at all. And it does seem like there's a pretty steady flow and state of the balance sheet. But what about the cash flow statements, Rucha?
Right, so cash flow is healthy over here. If you look at the CFO of FY24, it came in at about 160 crore positive versus 40 crore positive in FY23. But there was slight bit of disappointment when it came to the second quarter numbers actually. But that might not give the investor a whole perspective, Agam, because it is a midway. So if you look at financial year performance, healthy cash flow based on FY24 performance.
Of course. So as Rucha was pointing out, mid through the year, because the year is still in flux, there we tend to see not the complete picture, which is why we're not giving you the September numbers, even though the companies do report September numbers. But because of the fact that cash flow from operations for the past 2 straight years has been positive, we're going to give that a thumbs up as well. And from there on, we move on to return ratios. Now, return ratios are healthy. They're not bad at all. So return on capital employed is 19%, return on equity is 20%. And the reason why we're giving it a neutral rating is because a very strong, return ratio would be well over 25% for both ROCE and ROE. In this case, this number is not unhealthy, but it couldn't be better, which is why if we just go by the thumb mark, we're going to give it a neutral rating. But shareholding as well, I believe it's well held in general.
Yeah. 27% promoters, so good kind of free float is what we could see over here, around 78% free float. But let's break that down into domestic institutional holding, around 3% of domestic institutions, as we can see on our screens, and foreign institutions of about 14%. So healthy mix, not too much of promoter holding, and free float on a healthy scale.
Yeah. Okay, and we move on to street credentials then. Well, it's done reasonably well. So firstly, in the last 12 months, it's given you a return of 56%. Its dividend payout is not very high, but I wouldn't put it against the company, because this is in growth phase. So naturally, it will want to use all its profitability back into investments into the business too, which is why we'll give it a thumbs up given the kind of 56% returns in the last 12 months. But street coverage is, not there in general yet.
Yeah. So no one actually covering this stock on the street. I don't know why, but I think potential healthy returns could be a trigger for analysts to have this stock under their coverage.
Yeah, we must remember that in terms of absolute size, the company is not that huge. So while and as and when we do start seeing, a little bit more of coverage from, some of your relatively smaller names, even sell-side brokerages for that matter, and then eventually, of course, you will start seeing a little bit of more institutional play as well. And, not to forget that in terms of foreign institutions, they still hold 14%, which means that I'd reckon at some point in time down the line, we will start seeing a lot of these buy-side analysts also cover stocks. And that's when you start getting ratings as far as the street coverage is concerned. But for now, given the fact that it has no street coverage, we're not going to give it a negative rating, but we certainly will give it a neutral, because we have nothing to work around with. But finally, moving on to valuations, Rucha, how do things look there?
So all of the things which we right now talked about was largely thumbs up for the company, but this could be slight bit of disappointment, because valuation is at 57 times last 4 quarters. Now here we cannot take FY26 PE, because we don't have the analyst estimates for FY26 EPS. Therefore, let's look at the last 4 quarters EPS. Based on that, the PE ratio comes at around 57. And comparing this with someone like Oracle Financial, 48 times, which is also very high high, but still Orion Pro is higher than OFS's as well. Birlasoft, someone who's covering software services as well and product services as well, at 25 times. So valuation is too high for this company, maybe because of the recent stock rally is what we could see over here. So this, therefore, we've given a thumbs down on valuation because it is expensive.
Right, fair enough. Okay, so that's as far as valuations are concerned. That brings us to giving the company a total. In general, if you consider all the thumbs right now, well, you know, the income statement, the balance sheet check, cash flows, return ratios, well, and among the other factors, we have the shareholding, along with the way the stock has moved in terms of street coverage, as well as the valuation picture. Well, this brings us a total to around 6 out of 8, which isn't too bad for the company its size. That's the you know, overall ratings that we have had. But we must remember that this is not forward-looking. This is a rating based on what the company has done. Of course, as far as forward-looking statements are concerned, we'll come to that because we're actually going to talk to the management to tell us about what's in store. But before we go to the management, let's also very quickly consider the strengths, the weaknesses, threats, and opportunities for the company too. And I'm going to start off with strengths. So the strength, what potentially could be seen is, as we're looking at a little bit of recovery in the banking space, then the fact that the company has low debt doesn't exactly work against it. In fact, that's a tailwind for a company. In terms of weaknesses, again, you know, the cash flow generation has been patchy, it's been volatile, and the shareholder payout is also relatively weak. We must also remember that as far as the shareholder payout is concerned, the promoters only own about 27%. The balance is held by the public at large, and which means that this could be another one of those, well, aspects that could work against. But what about opportunities and threats, Prucha?
Right, opportunity is number one, low competition, because we don't have a direct competitor, as in, you know, software services, there are so many competitors, but in the product sides, there are very limited players over here. Next one is the rising IT adoption by clients. As we could see the recent commentary, IT is growing. CY24 was the year for IT. So that is one of the points. And expansion in US, which is currently just 7% of the revenue. So it drives majority of its revenue, as Agam had mentioned previously, from India. So US, which is currently 7%, could also be a opportunity for expanding over there. But threat could obviously be the geopolitical and macroeconomic risks, which were weighing heavy since past couple of quarters on various IT companies, be it software or product services. And also the big IT clients might foray into the products business as they are foraying into ER&D space as well. They might foray into products business, and this could be a potential threat to Orion Pro Solutions.
Yeah, well, even in terms of the latest news, well, from what we understand is the company's acquired a Paris-based firm called Phoenixis. This isn't a very large acquisition. It's for about 90 odd crores, but it gives you an idea about the kind of strides that the company is looking to make, the kind of markets that it wants to address. This specific one is a Paris-based company, as I've already mentioned, and it actually caters to the fintech space, and it will help Orion Pro while building out its footprints in Europe as well as the Middle East. And on the back of that, we've seen a little bit of rally too. Moving in. It does seem like the acquisition itself, at least as far as news reports are suggesting, doesn't seem to be very, very expensive. The stock itself, of course, has consolidated over the last 3 to 4 months. It has made a life high of well over 1,900 rupees per share. At the moment, it moves around 1,730 odd rupees per share, and it does seem like it's taking its time. But you must remember that, you know, we've seen this consolidation come in after a bout of a handful of very strong earnings trajectory in terms of your quarterly earnings. And that has actually led to some very, very sharp moves coming in, because I'm looking at where the stock was trading at around exactly last year, and it was somewhere around 800 and 900 rupees. So the stock has doubled from the last year as well. In any case, speaking of the outlook, let's now put the focus on the management and listen to what they have to say. We earlier caught up with Ashish Rai, Global CEO of Orion Pro Solutions, and here's what he had to say about the company's growth prospects going in. Listen into a slice of that conversation.
we've now grown at 30% plus for the last 4 odd years. The guidance this year is again to go north of 30%. I think we feel good about it. For the first half of the year, we've sort of paced well. The order book is in a great shape. Most of the strategies that we put in place in terms of expanding into Middle East, growing out the channel in Southeast Asia, building out the banking product stack, the closed loop, global loop sort of transformations in the US. I think all of it is tracking well. So we feel good about delivering the 30% plus growth for the year and driving EBITDA within the guided range.
Okay. So talking about EBITDA, let's talk about what kind of range do you expect achieving going forward, especially in FY26, because FY25 is about to end. If I look at your quarterly trend or the year-on-year trend, okay, let's talk about the first half of FY25 versus 24. There was a slight bit of decline in terms of margin. So what kind of margin are you targeting? And the levers is what I'm looking forward to.
Yeah. So, Rucha, I think margin band-wise, we guide a band of about 2%. So we said EBITDA this year will be between 20 and 22. We feel good about sticking to that range. At our pace of growth, when the business is growing at 35-40%, it's hard to really guide the EBITDA margin down to a fine point. So I would not read too much into margins either going up or down from one quarter to the next. By and large, we will stick to the band, and within the band, it may be up or down where it is. And then once in a while, it may be even outside the band, but that's got a pace. The pace at which you're building new product out, the pace at which you're delivering new projects. We just expanded into Middle East. We announced 2 back-to-back wins in Saudi Arabia. On the transit side of the business, we expanded to Europe. So there is a lot of, sometimes expense gets front-ended. By and large, for the full year, we will definitely stick within the band. And if it goes up and down a little bit from one quarter to the next, I would not read too much into it. Okay, so 20 to 22%, just trying to make a sense over here, 20 to 22% would essentially mean a flat or a degrowth in terms of margin. So I just want to understand the 30% kind of revenue growth, what the company is achieving, that is not essentially converting into margin, is it? So what kind of expenditure is weighing heavy on the bottom line? Yeah, so no, I would not really count it as a degrowth in margin. So by and large, there have been quarters where you've gone slightly above 22. There have been quarters where you've gone towards lower end of the 20. But by and large, I think we've been at about 21%, give or take. So I don't think it really has changed much. The way to look at our margins is this. Obviously, as the software side of the business scales up, as the tech platform side of the business scales up, there is the profitability in the business improves, but we have been stepping up our sort of spend in R&D over the last few years. It's gone up. 3 years back, it was at about 60 odd crores level. This year, it will be, I think, slightly north of 110 crores. So somewhere in the range of between 9 and 10% of the top line is going into R&D right now. We do not really capitalize any R&D, so all of that is expensed out. The commitment, or rather the plan that we have, which we've been fairly transparent over the last several years since we pivoted the business, is that the profitability of the business as the various software businesses scale will improve. For the next 2 to 3 years, we'll try and keep EBITDA margins between 20 and 22. And as the profitability improves, we'll pour the excess back into the R&D budget. So you'll see the R&D expense climbing up year on year. We'll have more products coming out. We've got a lot of investments around payments, a lot of investment around AI. So you'll see the R&D bucket going out, and we'll have a lot of enablement of newer and newer markets for our software as we expand, right? So for the next 2-3 years, I will say margins will remain more or less in the band that we've said, and the R&D expense bucket will keep on increasing year over year.
Right. Okay. So the excess profit actually goes into R&D, and you expense all of that out instead of capitalizing. And just very briefly, is this your long-term plan, or are you maybe looking forward to reduce your R&D spend and then growing more profits in next 3 to 4 years? Your very, very brief plan.
Yeah, Rusha, I think the idea is to keep on expanding into newer markets. So I believe the headroom for growth, the size of the opportunity in front of us right now is so large that we will have to keep spending on R&D to maximize the long-term value for the shareholder. As and when you get to a stage where we mature and the growth rates come down, I think that will be the time to think about it. That's not in the next few years.
Okay, sure. Okay, good luck. Actually, it's good if the company is expanding and you are actually spending or R&D over there. Fair enough. But let's move on to talking about a little bit of segmental change, because this is what is weighing heavy, especially on the IT software companies. You know, BFSI, that is the banking space, which is actually seeing green shoots. You know, many companies are seeing green shoots over there. And you also had mentioned last time that BFSI is picking up for you. But the recent earnings commentary by Accenture actually reveals that discretionary demand is still under pressure. So how do you reconcile this one for your investor? Number one, looking for demand in the BFSI space, and number two, discretionary demand yet to pick up. Is that impacting Orient Pro as of now?
Yeah, so I would not really compare ourselves to services vendors like Accenture and all. I think so. We are an enterprise tech player. We provide enterprise applications, enterprise software. We provide platforms. We provide payment systems. I think since we pivoted the business 4 years back to try and build a global products and platforms player, rooted in India, of course, but playing at the global stage. The goal was to build out tier one products in areas where we can see the demand runway, where there is a transformation need going on, whether it's closed loop to open loop transformation on the transit side, whether it's transaction banking transformation. So where we play, we see a very, very strong demand in the banking segment. Almost 70% of our business is some element of BFSI. We see a very strong demand in transaction banking. We see a very strong demand in corporate lending. And you also see a lot of movement where banks are moving away from custom software into enterprise products, into mature enterprise products, to bring in the best practices the way that we make, right? So I think we don't see any slowdown in demand momentum. I don't think I understand enough about Accenture's business or the IT services world in general to really be able to comment on spend around that. But we do see a movement from in the areas we are in. We do see a increased demand for products, right? I mean, both the segment right on.
Right, got that. Okay, so your sale of, so broadly for our viewers, the company actually operates in two different segments, the software services and the equipment and product license over there. Correct me if I'm wrong, Ashish, but majority of your revenue comes from the software services side. Even the margins over there are very healthy. If I look at the September quarter, around 79% of the margins is what we clocked over here. So this kind of mix, almost 60 to 40% of your revenue is there over here. So what kind of mix do you look at them looking forward? If you say earning 80% margins in the software side of your business, do you aim to increase share from the software side and reduce from the product side?
Yeah, so Rucha, the way I would try to answer this is this. I think it's probably easier to address by the business segments, in terms of domain. So banking software is almost 55% of our revenues. I do believe that will continue. That's right now growing at about 50% plus. I think that will continue to grow at 40 to 50% for the next couple of years. The other side of the business, technology innovation group, a large part of it is transit payments. I think there is a massive demand across the globe on systems actually getting upgraded to open loop systems. And we've expanded to US, into Latin America, Central America, etc. We're seeing a lot of global success, including in India as well. And I think that will continue to grow as well overall, right? So I think from a business segment standpoint, I think most of our segments will continue to see fairly strong demand. We will be able to defend margins as they exist, because a lot of margin is based out of IP, and I think that is a fairly strong moat around it. To the extent possible, the business improves, we'll keep investing in R&D for each of the product stacks and keep on expanding it. Enterprise AI is a huge bet for us. We believe this is a significant opportunity for us to lead the world in terms of the product stacks that we built out in terms of AI, making the enterprise applications AI native. as we go over the next few years, and I think that again will continue to propel both the growth as well as the margins for each of our products.
Right. So let's move on to latest order book and pipeline. You mentioned about healthy order book and conversion of that into revenue is also happening. You have around 1,100 crore in INR. This kind of order book you have. So can you tell us the breakup between TIG, that is the innovation group, and also the banking and fintech, because you very much bullish on the banking side of the business. Can you give us a breakup and the kind of momentum going ahead in these two aspects, please?
Yeah, so between TIG and banking, I think the split is roughly 60-40. TIG is slightly longer term contracts, hence the split is higher. Banking is growing very fast right now. It also moves from, sells and delivers a lot of it within 12 to 18 months. So it also consumes the order book faster, right? So right now, it's a little bit north of 1,100. We'll publish it at the end of the quarter. So we'll publish the new number, but the last one we published was a little bit north of 1,100, and about 60% is TIG and 40% is banking.
All right, there you have it. That's the management of Orion Pro telling us about all that is in store for the company going forward. But with that, it's a wrap on this edition of KYC. Losma lined up on the other side. You're watching NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30 calls before the markets open on NDTV Profit.
Jubilant Food above a 600 level on Friday.
Wipro can be first trade to buy
all commodities, but in that Vedanta looks good.
Our experts give you the top stock ideas to prepare you for the day.
ICICI Lombard stocks hit the first target.
It has given a very good momentum with good volume.
Don't miss the chance to make the right moves. Only on NDTV Profit, where winners are made before the bell rings.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
We set you up for the day's trade. 30.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Hot Money. I'm Hiral Datia, and with me is Mika Barve. Mika, good afternoon.
Good
Clearly,
afternoon.
100 points uptick in terms of Nifty 50 is what we're seeing as we speak right now. Let's quickly pull up this chart on the screens and see